would not do that because that would increase his risk for subsequent infection. I also, as we think about these discordant households, in my mind, we eventually, as we open up vaccination, need to prioritize households in which at least one person have been vaccinated so that you can create a family sense of normalcy as you move forward. For individuals with a single person in the household or for individuals with, in congregate settings, obviously, as we roll out vaccinations, those will be our next tier, but we really need to get the household back into some sense of normalcy by vaccinating its entirety.
Professor, it's good to see you. Come back soon. Jason Farley there, Johns Hopkins nursing professor. Thank you, sir. So looking at the data, 15.9% in the US, at least one shot, 8.1% fully vaccinated. Done a compare and contrast between the United States and the UK a few times, Tom. 31% in the UK, one shot. 1.3% fully vaccinated.
Do you see any movement on the continent of Europe? I mean, I'm sorry, the hungry news frankly stunned me.
So we can go through the data quick, Tom. Let's pick out France. 2.6% fully vaccinated, almost 5% one shot. Problem with acceptance now and not supply, and Lisa's been talking about that as well over the last couple of days, and we'll talk about it some more. From New York City this morning, good morning. Alongside Lisa Brown, it's Tom Keane, I'm Jonathan Ferro. Futures are down, we're off by 12, we're off a third of 1%. We recovered just a little bit from earlier on. This is Bloomberg.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of specs. We remain very confident on the competitiveness of the Hong Kong stock market.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
What kind of leader are you?
I'm a leader that works on figuring out destinations that we should aim for, and then chooses the direction.
It's going to be a very difficult dance for the Fed, and actually a very difficult dance for the bond market.
There's a real battle, I think, going on between what the market thinks will happen and the Fed wanting to say, look, hold your horses.
Unlike last year, those checks may be coming at a time when the economy is reopening.
There are real base effects coming through here that gives the optics of inflation being much higher than it really is.
It's not a straight line higher. The year finishes pretty good, but there's a good correction along the way.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Chairman Powell coming up from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Equity futures down, 11 points on the S&P 500. A small move lower, Tom Keene, after a vicious couple of weeks now for big tech.
It's a churn, John. I mean, we're there, and as you mentioned, Chairman Powell will be up here later, and, it's Thursday. We got claims coming up. John, the one thing that's a pivot point on my Bloomberg terminal screen is like a rock. I'm going to go all Bob Seger on you here. The real yield hasn't budged in 3 days.
After a massive move last week, Tom, and that's been a story for big tech weighing on valuations. I talked about this earlier. Apple down 10%, Amazon down 11% over the last 30 days alone. And because of the weightings on the S&P 500 and the NASDAQ, Tom, it makes it really, really difficult to get that performance at the index level.
But at the same time, it's a partition of, do you look at the granularity or look at the total picture? In bonds, the real yield, like a rock, hasn't budged. And we're in the NASDAQ, John, as you talk about, there's a rotation going on. Jeff DeGraff over at Renaissance writing that up this morning.
Does Chairman Powell budge, Lisa, a little bit later?
Yeah, the question, how much does he push back against the rise that we've seen in yields? I do have to say, though, that the stability in real yields highlights this real debate emerging in markets. People really cannot agree on whether we're going to see rampant inflation or whether we're going to see a disinflationary environment with calls of rates going up rapidly to 2%. And then you have PGIM and Guggenheim on the other side saying we've seen the highs and they're headed lower, John.
1%,
I think that's interesting.
Robert Tibb looking for 1% after all this. It's the what next of this that is fascinating. We can all agree you'll get an inflation spike over the next several months just because of base effects.
Right.
What happens next is the big story. Here's the story, politically speaking, Tom. The United States will suspend retaliatory tariffs on UK products caught up in the long-standing dispute of legal aid to Boeing and Airbus and a boost for post-Brexit Britain's trade agenda. Tom, your take?
My take here is this is a big deal. I don't know the minutia. We'll learn about it through the day, particularly from our United Kingdom trade team. I don't know who wins here, but what it really says to me, John, it's the first movement where the Biden administration is walking back from the certitude and the theory of the Trump administration.
And I just wonder, Lisa, whether they can help the UK come a little bit closer with another ally, Europe.
Yeah, and the idea also of how they play this with China, right? I mean, this idea that they try to get a coalition so they can go after China and have a more competitive heft as they renegotiate some of the trade issues there.
That's the news crossing the terminal in the last couple of minutes. Here's the price section for you. The S&P 500 taking a little move lower. On the S&P, we're down 11. We're off by a third of 1%. Thank you for that value-add contribution, Tom. In the bond market, yields lower by a couple of basis points to 146. Chairman Powell coming up a little bit later. And Lisa claims in about 90 minutes' time.
Yeah, and we'll get to that. Before we get to that, at 8 a.m., we're going to be having that OPEC Plus meeting. Really interesting to see how Saudi Arabia perhaps pushes back on some of those voluntary production cuts that they had imposed as part of the January meeting. The real push-pull here, the delicate dance of are they oversupplied or undersupplied as the world comes back online. 8:30 a.m., we get those U.S. initial jobless claims. We've glossed over this, but we're expecting them. The average estimate is 750,000. That's an increase from last week. Increase is bad. More people filing for jobless claims, just showing how far we have still to go in the labor market, even as the market prices in 2022 and 2023 in a post-pandemic era. And then at 12 p.m., you've been talking about this morning, John, and rightly so. Jay Powell taking the helm at a Wall Street Journal conference. How much will he push back? What are his parameters to show that there is labor market improvement? And how concerned is he about froth in markets? Perhaps that froth has gotten blown off a little bit by some of the declines we've gotten in the NASDAQ, yet still a lot of concern about the incoherence between markets flying high and an economy still very much battered.
His semi-annual testimony last week feels like a lifetime ago. Tuesday, Wednesday, he was comfortable with the move, Tom. Looking along the curve, I wonder what he was uncomfortable with after that, if he was uncomfortable. The long end or the very front end, and pricing him in rate hikes too soon, maybe?
I want to do two things here. The front end we'll talk about in a second. John, this is really, really important. The idea that time is almost stretching out from November and December of last year, where, like you say, it was like weeks ago that Chairman Powell was before Congress. I mean, it's a weird time. John, the 2-year yield, this is the Bloomberg value add, folks. 2 standard deviation mark after the oddities of last week on the 2-year yield is 0.1509. This is the granularity that we're doing. You don't see this on TV and radio too much. But, John, that's an important trip point for me on the 2-year yield. We're not there yet.
The volatility, I think if they're uncomfortable with one thing, the volatility of Thursday through the curve, Tom, particularly through the belly and the long end, and also the very front end too, pricing in rate hikes, maybe at a time that's inconsistent with the way that he sees the world.
And John, our next guest is dazzled that we go to 4 decimal points in the 2-year yield.
That's why he joins us. Phil Camporelli, JP Morgan Asset Management Global Allocation Portfolio Manager. Phil, moving on.
When they're at 0, you got to go to as many decimal points as possible.
That is right, Phil. Well said, Phil.
Particularly if you want to get paid.
The line from you, Phil, committed to pro-cyclical positioning in global allocation. Why the global part? Why not just the US part?
Yeah, so this is sometimes it feels like, guys, that this is a U.S.-only pandemic. But big picture here, we're going to see the world emerge from this pandemic. So our view is really to stick with the pro-cyclicality around U.S. small cap, and I'm going to get to that in a second, as well as the emerging equity story. The emerging equity story is really important in a world that's recovering. That market has the biggest beta or vulnerability to global growth, and we think global growth is going to move higher this year as we emerge into a new state of normalcy. But the rate story is really important, and I love all of this rate conversation because it's such a high-class problem to have. Do you realize we're having a conversation around 10-year treasuries? And I know it happened fast and that rattled investors, but 10-year treasuries getting to 150, okay? And they got there because of this incredible, as you guys mentioned about 10 minutes ago, 2 million vaccines per day, an incredible rollout. I mean, think about all of the collaboration on vaccine rollout, as well as a fiscal stimulus plan that is really going to be the same as last year as a percent of GDP, but in a recovering economy. So this is a really high-class problem to have. And if you're long equities, you were short duration coming into this year. You needed rates to move up and start to price in some of this recovery.
Do you think 20 basis point plus moves intraday on 10-year treasuries and big fat tails in auctions, the 7-year total fail in the minds of many people, do you think that's a high-class problem, Phil?
Yeah, well, I think that is what rattled investors. But the big picture, and again, it's so nice to see auctions moving markets again. We haven't seen auctions move markets since before 2008. It's been a decade since we've seen auctions move markets. So that brought back some really interesting memories. But that is what really rattled investors. But John, here's the big picture: financial conditions, where rates go, where credit spreads go, if the equity market behaves, and does volatility behave. All 4 of those things are still lining up for that's informing our outlook, and our outlook is still really positive. But John, I agree with you. If that tail and that little blip to 160 that took place at about 1 o'clock right after the auction last Thursday, that was rattling. But you have to step back and say, okay, are financial conditions tightening, or are they still easy? And we're still in an easy reflationary trade that the Fed is going to support.
It's a high-class problem for the United States, perhaps not a high-class problem for the rest of the world. This idea, when you talk about the 2 million vaccinations a day, we're talking about the United States and the rollout there. We're talking about a dollar that has gotten strength on the heels of the vaccination schedule that has actually been ahead of the other places around the world. How can you be long emerging markets? How much do you depend on the dollar weakening? And how do we get there if the dominance, if the growth is being driven by the United States?
Yeah, Lisa, that's a great question. And that's why we have kind of this barbell approach between small cap, which is the U.S. reopening story, as well as rotations into value in the U.S. I think that's really important. We introduced a large cap value sleeve to the fund for the first time. Okay, but we also have confidence in emerging markets because of the beta to global growth. So if the U.S. consumer is getting a big fat check, that's going to be good for the emerging world and all the goods that the emerging world produces. Now, if we saw the dollar really moving and a U.S. exceptionalist story really becoming the base case, Lisa, that would inform our emerging market view. And we're starting to see some risks of that over the past couple of weeks, but our base case remains that emerging markets and small cap are the two best ways to kind of implement our pro-cyclical story. And China A-share. China A-share is also a new sleeve that we introduced. And that's almost like a small cap China story, which we feel really good about because of their ability to have their arms around the virus, but also the pro-cyclical view.
Phil, one of the great partitions we have are strategists talking about stay with tech even as you rotate to other things. What do you do with the cash generation of these giant tech companies? I mean, it's visible and it appears to be sustainable.
Yeah, so that's almost like having your cake and eating it too. So in the very near term, as these rotations are supercharged, like we saw yesterday and like we saw over the past week or so, Tom, that's going to be a tough trade to hold on to, which is why we're balancing more into value, but we're not abandoning growth. And a lot of people have made this point. Tech today looks much different from kind of the real nasty memories that folks have of the late 90s when these companies weren't making any money. I mean, these companies are part of the American economy right now. So these structural winners, we're going to stick with. But in the near term, we want to make sure that we don't have too many eggs in that tech basket because it worked so well last year. We knew the reckoning was coming because as the economy reopens, the FANG stocks or the S&P 500 was going to be somewhat at risk because of the weighting that the S&P had. So I think that's really important. This year is not about do you have beta or risk in your portfolio? Do you have the S&P in your portfolio? This year, success or failure is going to be driven by how big and bold are you with your bets. Saying you're overweight stocks is what everyone is saying. How big are you and bold are you with your bets? But the second thing, which you touched on, is security selection. Security selection and active, kind of managers picking the reopening, the cruise lines, the airlines, right? When and where that happens. That's going to determine success or failure this year. That wasn't the case last year. Last year, the case was if you threw a dart at a risk asset, it went up. It's not going to be that easy this year.
Hey, Phil, just a great summary in the last 5 minutes of what's happening in this market right now. Phil Comparelli there of JP Morgan Asset Management. Equity futures turning a little bit higher, up 11, down 11 rather, off by a third of 1% on the S&P 500. We recover just a little bit. From New York City this morning, good morning, alongside Tom Keene, Lisa Bramvitz, I'm Jonathan Ferro. 8:30 Eastern, jobless claims in America. 12 Eastern, Chairman Powell a little bit later. From New York, this is Bloomberg.
With the First Word News, I'm Rishika Gupta. It now looks likely that the Senate will not pass President Biden's $1.9 trillion pandemic relief bill until the weekend. Lawmakers delayed the start of debate whilst they were awaiting an official cost estimate on the latest version of the bill. Democrats are also making changes to the House version. Amongst other things, they'll tighten eligibility for the $1,400 stimulus checks. The House has passed a landmark bill to overhaul elections, but it probably will stall in the Senate. The measure would make it significantly easier to vote. It would also limit gerrymandering of congressional districts. Most Republicans oppose the bill, and it's unlikely to get the 60 votes needed to overcome a filibuster in the Senate. And Donald Trump is telling allies he is strongly considering another run for president in 2024. And Bloomberg has learned close advisors want him to choose someone other than Mike Pence as his running mate. Pence rejected his boss's appeal to overturn his re-election defeat when he presided over the count of electoral college votes. SpaceX's newest and biggest rocket pulled off its first successful landing, but then it exploded moments afterwards. The Starship SN-10 prototype lifted off from a launch pad in Texas and flew to an altitude of about 6 miles. Then it appeared to achieve a milestone with its first stable landing in 3 attempts just before the explosion. 2 other Starship tests also ended in fireballs. Amazon reportedly is in talks to carry many National Football League games exclusively. The NFL is on the verge of signing a new multi-billion-dollar deals with media partners. According to Dow Jones, Amazon could end up with a significant number of Thursday night games on its Prime Video platform. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
Nuestro país, igual que los demás países del mundo, no está preparado para esta pandemia. Más aún, los más afectados son los países de desarrollo como el nuestro, ¿no?
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
It is urgent and overwhelmingly supported by the people. It's good policy and it's good politics. And I'm not sure we've ever seen something that is needed as badly as the American Rescue Plan that was as broadly popular.
President Biden speaking at a conference of House Democrats selling a $1.9 trillion relief plan to the American public. From New York City this morning, good morning. Alongside Tom Keene, Lisa Bramis, I'm Jonathan Ferro. Your Thursday morning price action looks like this. We're down 8 on the S&P 500, off by 0.2%. The follow-through from yesterday, slightly negative again for the NASDAQ. The why? Well, it's not in the bond market today. Yields are down by a couple of basis points to 146 on 10s, Tom. Claims 1 hour and 12 minutes away. I think Lisa running through the estimate earlier. 750,000 is the number to look for.
Yeah, a number of things to look at here. Within the tea leaves, maybe euro dollar, what's it going to do? And also, John, again, I go to a static real yield. I can't find it right now. There it is, a negative 0.76%. Maybe they're quiet there before some form of storm. Right now, and this is timely, we get to rip up the script, and we can always do that with Kevin Cirilli, our chief Washington correspondent. Kevin, you know there was a dash by the Biden administration to 5 a.m. headlines in the first heady days of the administration. Today we got a 7 a.m. headline where our Joe May says that the Biden administration is going to give a 4-month waiver, if you will, with the United Kingdom for negotiation. That is very non-Trump-like. Is this the beginning of trade adjustment by the Biden administration off of the 4 years of the Trump regime?
Yes, it is, and 2 points here. First and foremost, the UK had gotten rid of some tariffs back in January just to see whether or not the United States would follow suit. But this is a major step in a different direction than the previous administration as it relates to U.S. and UK trade relations. But secondly, I mean, this Airbus thing, this has been going on at the World Trade Organization for what, 17 years?
Yeah, I noted that.
I mean, this is a massive step, even beyond the Trump and Biden administrations, a massive step towards resolution on that front, and something that's been going on for quite some time.
Can you or our team, all the contacts you have with Mr. Gordon, Craig Gordon down in Washington, can you say that this will rotate over to China, where we'll begin to see amendments with China like we see now with Britain?
No, I think maybe in terms of agricultural purchases, in terms of holding President Xi Jinping accountable to the agreement that they made. But I'll be interested to see how Secretary Vilsack, when he speaks with our David Weston later this afternoon, what he has to say on how he plans to hold China accountable for following good on their words to make those agricultural purchases. But from a broader standpoint, I would actually go further and suggest that the Europeans are now more aligned with the United States on how to deal with China, because in the last administration, there was many different competing ways to deal with China.
This is really important because the former National Economic Council Director, Larry Kudlow, you remember, Kevin, used to talk about a coalition of the willing to confront China. And now we've got an administration that's trying to work with their allies just a little bit more. Now, you're talking about people being on the same page. How does that manifest itself in policy, so to speak? Just saying it's one thing. What do they do together?
Well, from a cybersecurity perspective, I think that there's an opportunity for the United States to work with international coalition organizations, including NATO, for example, in terms of reining in not just China on cyber, but also Russia. Yesterday, I spoke with Mike McCall. He's the top Republican on the House Foreign Affairs Committee. And when I was speaking with him about about China policy, there was a lot of agreement between the Republicans on that committee as well as Democrats. So especially in the 5G and the quantum space and emerging technologies, I think that there's a lot of cohesiveness coming out of Washington on how to deal with China.
Okay, so maybe that's in the international sphere. On the national sphere, though, we really have to talk about some of these warnings that we got yesterday from law enforcement about a militia threat to the D.C. region today due to a sort of disagreement over when the true inauguration date is. What do we know about that militia, and what are lawmakers saying?
Well, they're a fringe conspiracy group, and I can tell you that yesterday I spoke with Alyssa Farah, who is the former White House director in the Trump administration of communications, and she had been very critical of her former boss for his actions and handling and communication strategy on January 6th. Publicly, she's been very critical on that, and she urged former administration officials to come out and to disavow even before today. Just anecdotally speaking, here in Washington, there definitely is a palpable sense of angst, so to speak, not like what we saw with 25,000 troops, but there's still 5,000 National Guardsmen that are guarding the U.S. Capitol. But definitely this is a city on high alert.
Well, you're talking about Alyssa Farah and the conversation that you had with her, and yet we also got news that President Trump is plotting his 2024 run, perhaps without Mike Pence. I mean, can you dovetail the support that Republicans have for President Trump, the lobbying to be his vice presidential nominee, at a time when there are new threats coming out?
Well, there's a great scoop by our colleagues, Jennifer Jacobs and Mark Niquette and Mario Parker. And yesterday I spoke on Background with a top Trump advisor about all of the 2024 jockeying. There's two really important points here. Former Vice President Mike Pence has not been shy about his potential ambitions to launch a 2024 campaign. So if you subscribe to that, he needs to make sure that if Trump runs again, he doesn't have to be on the ticket. And so that story yesterday does that. It separates them and allows for both of them to move forward over the next cycle for their own political jockeying. But then secondly, the biggest hurdle, should Trump decide to run again, is going to be how he maintains that he could win a general election argument. And so a new name on the ticket would help him do that.
Who will he run against? Kevin, I can't believe we're doing 2024, but let's stick on it just for a moment. That's the real question. At what point do we have a real conversation about President Biden, A, completing a term, and B, talking about who he wants to ordain as the person to run in the next race?
You know, and I can tell you that the jockeying on the left is already, there are different markers going down. But I think that everyone on the left is so shy to talk about that biggest elephant in the room, which isn't former President Trump. It's whether Biden runs a second term. And I would caution against people just assuming Trump runs again. That is not a guarantee at all.
Kevin, I think I can speak for Lisa Abramowitz and Jonathan Farrow. Can you someday talk to us on Background? I mean, I just think. Do you think John ever would talk to us like on Background?
Yeah, no one can hear us,
Kevin. What is on
You're
Background?
Right.
Does anybody talk on Foreground?
Well, you know, background means that you're not able to say who the name is, But I disagree. There's this, not to get too
You're about to tell us who the name is.
Yeah,
I know. I'm like, Kevin, there's a microphone right in front of your face. But not to get too academic or journalism-y, if that's even a word. But
okay.
I kind of think folks in Washington, I believe strongly, should always speak on the record. I think you're elected or you work for an elected official. Come out and say it.
I think people are thinking twice about talking to you on the background anytime soon now, Kevin.
I know. See the trouble I get in on this show?
Digging a hole here.
And John's always on background with me because John never mentions my name.
Kevin, thank
What are you drinking, Tom?
Chief Washington correspondent, host of Sound On Bloomberg
The celery
Radio
ruined it.
weekdays
What can I say?
at 5 p.m. Eastern.
I want one.
Okay, from New York City this morning, alongside Tom Keene, I said it,
Markets are
and
better.
Lisa
Thank you,
Bravitz.
John.
I'm Jonathan Ferro. My pleasure. Futures down 0.2, off by 9 points on the S&P. Good morning to you all. Heard on Bloomberg Radio, seen on Bloomberg TV. This is Bloomberg Surveillance.
generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
From New York City for our audience worldwide, this is Bloomberg Surveillance live on TV and radio, and here's the price action for you. Starting with the equity market, with equity futures down about 0.25% off the lows on the S&P, the Nasdaq, and on the Russell as well. The story of the last couple of weeks, in fact, through most of this year, it's about the weightings of a benchmark and the struggle to really get much higher from here on the S&P 500. This is the Morgan Stanley world. This is the Bank of America world. This is the Wells Fargo world. This is what they've been looking for. A struggle to break that 3,900 level. Because of this, switch up the board and just get to three names. Amazon, Apple, Tesla. In line with about 11-12% of the overall index, in line with the overall weighting of the financial sector on the S&P. So even though the financials year to date are up 13%, look at the 30-day performance of these names. Apple down 11%, Amazon off by 10%, Tesla off by 23%. If these keep going down, the headline number is going to struggle. And I've been talking about it over the last couple of months, and it's been obvious, I know, but this really is the story, and it's worth repeating. If you want the S&P 500 to go higher, these names have got to stop going down and fast. Finish on this in the bond market. Can we breathe some life into that trade from this in the bond market? This one today down to Chairman Powell. Yields on a 10-year, 146, and down about 2 basis points on a session. On a 30-year, we're down 4. That's called the bull flattener when the long end rallies, Tom. And this, of course, is going to be all about Chairman Powell a little bit later. How comfortable is he with what he's seen in the last week? And does he feel the need just to lean in just a little bit?
Said under this, and we mentioned the real yield, John, I'm still going to go back. I'm watching the 2-year yield like a hawk. I'm sorry, after what we saw last Thursday, don't tell me the 2-year yield can't move.
I tell you, Tom, not just the front end, but also rate hike expectations as well. And I imagine if there was one thing outside of what happened through the belly of the curve and the long end, that was one of the things that maybe made this chairman just a little bit uncomfortable. More on that still to come with your movers. Here's Romain.
Yeah, John, you mentioned Apple, Amazon, Tesla. Of course, when you look at the rally that we had to start this year, a 9% 6-week rally in the NASDAQ composite, those three names were largely responsible for that. Of course, when you look at the past 3 weeks in the 8% drop in the NASDAQ composite, those three names also responsible for that as well. In fact, most of the mega cap tech names are lower again, once again, here in the pre-market. This is going to be the third straight day of losses should what we're seeing in futures markets hold into the open here. We should point out, though, really stocks here have really gone nowhere now since that peak on the NASDAQ composite back on February 12th. Of course, what that means for the Teslas and Amazons of the world, Square as well. Two of those names on the board right now that you're looking at here, of course, those are two of the biggest holdings in Cathie Woods' ARK Innovation ETF. That ETF now down about 20% from its peak. So a lot of these names are not only correcting, but starting to flirt with bear market territory.
Romain, you know this cold. I mean, you know this cold. On a standard deviation base, I'm going to defend Cathie Wood here.
Oh, okay.
ARK is down, but on a techie volatility basis, I mean, I don't like these articles that it's a bear market because they're comparing it to Dow Jones standard deviation, and that's not accurate.
Well, hold on a second, Romain, weigh in on this. There's also the concentration risk, and we talk about the benefit of being bold. On the other hand, if she gets outflows and is forced to sell, how much of a spiral is this, Romain?
Yeah, and the problem is, too, I mean, you talk, and this goes even to John's point about the idea of weightings here. I mean, I think a lot of reason why Cathie Wood is getting beat up here is because there's a heavy weight here between, basically 4 or 5 names, Tesla, PayPal, Square, Roku, and a couple others. Once you get beyond that, it drops off. So the problem is if she gets a little bit of ructions in those names here, the ETF isn't really going to get much traction unless she does decide to do a little bit more of that sort of active rebalancing. But she's made it clear that she thinks Tesla is a long-term bet. She thinks it's a good bet, and she said on our air here that she's been buying the dip. So we'll see what happens. I do want to point you to another big story that's going on today that's probably going to have some real implications for the markets, and that's what's going on in the commodities space. We are, of course, waiting to get the outcome of that OPEC Plus meeting here. We remember yesterday we saw all the shale producers here in the U.S. rally. There is a general sense here that OPEC is going to come in somewhere around 900,000 to 1.4 million barrels. The general consensus is that would actually be supportive of prices, but there is some concern that they could go above that 1.4 million. That wouldn't be good. You're seeing the XOP move a little bit lower here in the pre-market, but keep in mind most of the names in that index have rallied about 5% per day for the last couple of days here. And then what we're seeing in the copper and space and industrial metal space, huge here. We saw tin basically collapse last week. Now copper down about 5% in London this morning, well below that 9,000 mark. So keep an eye on what's going on there because remember the trade there probably had as much speculation as what we saw in a lot of the equities. Whether that speculation and whether those prices are actually sort of in sync at all with what's going on with actual demand, we shall see. But right now, that's what's moving. And of course, the fuel cell stocks and a lot of those alternative energy stocks, also a big Cathie Wood favorite, also moving lower.
Romain Bostic, thanks so much. I'll mention Bitcoin off the 52 level. down to 49,000. Futures, nice advance here. They roll over a little bit, negative 14 right now on the future. Shahab Jalanous is out of the London School of Economics Combine. He's at Credit Suisse, where he drives forward foreign exchange and rate strategy. And what's so important about Shahab Jalanous is he writes brilliantly clear paragraphs about his belief in the market. You read 3 paragraphs, you know, right where he is. Shahab, I want to go right to the heart of it, which is the 4,000, almost 5,000 miles from Sydney up to Tokyo. You're going to look at the commodity expression in Australian dollar, and you're going to play it against the yen. Why?
Morning. Well, yes, we've had the view that it's best to really take the dollar out of the picture altogether and focus on being short the classical funding currencies. Those are the Swiss franc and the Japanese yen, and to be long the more high beta reflation-based currencies, and the Australian dollar is one of those. And if you do this, then you effectively play the global reflation story that's playing out. That's the reason why, for example, U.S. yields are going up, without necessarily being exposed to some of the issues involved with trying to trade the dollar directly.
Shahab, I want you to go wider with John Golub's optimism and his very distinctive Credit Suisse view on a better stock market in America. Do you look at these dynamics in foreign exchange as a statement of a better global economic growth that takes away the ambiguity we're all fighting with right now?
I think so, because if we have higher rates and shakier stock markets as a fear for the markets, I think what's more important though is the fact that although stocks are weaker, they're not collapsing, and also volatility is still fairly subdued by historic standards when you get events like this. So from a foreign exchange perspective, until you get to a point where there's enough asset price volatility as to really push markets hard on getting out of pro-cyclical trades, what tends to happen is that the market sticks with those, particularly if there's a positive carry dynamic as well. So we think that as long as implied volatility, realized volatility stay at manageable levels, what we're really seeing is a reflation story being priced in, not a potential major risk aversion event. So that's why, as I said, we really like being short the big funding currencies like the Swiss franc and the Japanese yen.
Okay, if you take a step back, there's been some confusion around what's driving FX traders in terms of, is it rate policy from central banks? That really hasn't been the case since it's been a race to the bottom. Has it been the inflation story? Has it been the idea of vaccination schedules? There have been different stories that have been dominant when it comes to FX flows over the past 6 to 12 months. What's the dominant story right now, Shahab?
Well, the dominant story right now definitely is the reflation story. Within that, of course, there's different dynamics. There's, for example, the vaccination story, as you said, which has been very beneficial for the pound, for example. But there is also a U.S. fiscal story that you could argue is somewhat unique to the U.S., and that's been recently helpful for the dollar. But in some ways, they both fall under the bucket of global reflation. They're just different nuances on that theme. So I think as long as we can keep looking at things in that way, if we can simplify it to that extent, then you can actually come up with some consistent themes in the FX space to play, and that's what we've been trying to do.
Shahab, I'll ask the boring question. Chairman Powell, 12 Eastern, what are you looking for?
Well, I think the question now becomes to what extent can you push back against the market's attempts to price rate hikes, not just on a 10-year horizon, but even within the next 3 years or so, that definitely go beyond, for example, what the Fed's dots have in mind, what markets believe forward guidance is looking at. Now, the longer he refrains from really pushing back against these efforts, the more likely it is the market just accepts that what we'll see going forward is just a reassessment of the Fed's view, more in line with the market's view. That just encourages the market to continue. So I feel that if Powell is fairly neutral in his comments, that's the direction we're going to go in, and that ultimately benefits the dollar against, again, the low yielders, the Swiss franc, the yen, and potentially even the euro in that context.
Shahab, good to catch up, sir. Shahab Jalanous, Credit Suisse Chief FX and Rate Strategist, and I think this is probably the optimal way to separate G10 right now, Tom. Often is. The low yielders, the Swissy, the Japanese yen, and then the commodity currencies, the Aussie, the Norwegian kroner, etc., and how the dollar bites into each of those trades. I think it's going to be interesting given what's happening with rates in America and the outlook for growth here too.
And what's so important to this, John, on radio and TV is so what? Why does this matter outside the roulette of pros trading cross rates, pros trading the major currency pairs? And the answer is, as we heard when he talked about John Golub, it dovetails into everything else we do.
Dovetails into everything. Dovetails into central bank policy, the FX channel, into an inflation mandate. And I think it could upset some really big consensus trades as well. And we've talked about it repeatedly on this program, Elisa. EM's one, and the commodity trade is another.
Yeah, the idea that everyone's thought that the dollar should weaken in a global reflation trade. And I guess that my major question, even emerging from that interview with Shahab Jalanous, is if it's a global reflation story, can it be that if it's just the U.S. right now? If the U.S. is leading in such a material way and you have such massive laggards, such as the European Union. And this, I think, is one of the big tensions in markets that really has driven a lot of the uncertainty in the FX channel.
I totally agree. I couldn't agree more. How synced up is global growth going to be this year, Tom? And for those of us looking for a repeat of 2017 again, I think there's a real struggle on our hands to see that develop.
Yeah, I'm not spending too much time on that, John, because I don't have a clue what global growth is going to be. I'm going to look at the data coming out. Yes, jobs matter, but John, I'm going to go back to what we said a couple days ago, which is retail sales in America, that pulse of consumption, frankly, is just as important as a jobs report.
Because policy matters. The labour market and where the labour market's been doesn't really tell you the full story, does it? Because policy, fiscal policy, checks into the hands of Americans has been driving retail sales too.
Back to World War II, back to, I'm going to guess, 1947, call it a Greater Marshall Plan.
Yeah.
We haven't seen this in 2 generations.
Tom, we got a 5 handle on the GDP estimate for this year now. The estimate's come up a little bit to 5% for 21.
I don't even know how you look that up.
To 3.7% for 22.
Do that.
And then 2.5
I
on
knew it
23.
at the Bloomberg terminal.
ECFC. You know this already. Lisa Bramis, Tom Keene, I'm Jonathan Ferro. Coming up, Olaf Scholz, the German finance minister, on why Europe has struggled to roll out this vaccine and the path ahead to gradually unwind restrictions in Europe's largest economy. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. It's a boost for Britain's post-Brexit trade agenda. The US will temporarily suspend retaliatory tariffs on UK products caught up in the long-standing dispute over illegal aid to Boeing and Airbus. That means items like scotch, whiskey, biscuits, and clotted cream can be imported to the US from Britain without being subject to an extra 25% tariff. The Senate isn't likely to approve President Biden's coronavirus relief package until the weekend. Lawmakers are waiting on an official cost estimate for the latest version. Plus, Democrats are tweaking the measure that was passed by the House. The president agreed to moderate demands to tighten eligibility for the $1,400 stimulus checks. And President Biden is struggling to head off a potential crisis on the southern border. A spike in migrant crossings, especially by unaccompanied children, is threatening to overwhelm government shelters. Republicans and some Democrats say the president's policies caused the surge. He says it's not a crisis. OPEC and its allies are keeping oil watchers guessing about their next move. The market has been expecting the cartel to increase production at today's meeting. Analysts say OPEC Plus may deliver a smaller increase than expected. And Lufthansa has posted a record $8.1 billion loss for the year, and it says it will struggle to break even before the end of 2021. The pandemic has forced Europe's largest airline group to dial back capacity plans to a level where it's unlikely to make any money. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Freezing tax thresholds is fair, asking more of those on higher incomes. And we're going to ask large businesses who have made a profit to contribute as well.
Rishi Sunak there, the UK Chancellor of the Exchequer, speaking in the last 24 hours, delivering the budget in the UK from New York City this morning. Good morning. Alongside Tom Keane, Lisa Bramwitz, I'm Jonathan Ferro. Your market looks like this. Futures down 8. We recover a little bit, back through 3,800 on the S&P, down 7 and negative 0.2%. In the FX market, euro weaker, dollar stronger, 120.33. And a bit at the long end. Yields come in a little bit. The bull flattener, the long end outperforms. Yields in a couple of basis points to 146. The story, Tom, it's about 4 hours and 12 minutes away. It's Chairman Powell a little bit later. Before we get there, it's initial jobless claims at 8:30 Eastern. Your estimate, 750,000.
John, I'm going to call it an improved tape, and then we'll see here. You know, we got the back and forth here and all the economics, including, 45 minutes until claims. John, to get to our next moment here, and I want to set this up because I think you've lived this with your travels. We make jokes about it, folks, but, the serious stuff going on over in Europe. Bild over in Germany today, John, really comes in. This is Paul Ronsheimer and Julian Raclette in Bild, the German newspaper, talking about how the ministers of the nations had to hand over control of the vaccine operations to Brussels. And there's, of course, a United States of Europe versus United States of America parallel here. And I get it that Bild's, not inflammatory, but, they've got their angle, John, that I think our listeners and viewers know. But this is a strident article of Germany losing control, or the perception of that, I should say, of the vaccine process.
Well, I hope we can bring Matt Miller into the conversation from Berlin, Tom, but I think how we frame this is really important. It's not just that they were pushed to, they did it voluntarily in many ways as well, Tom.
Yeah.
They could have stuck with it on their own path. They could have pushed back to Brussels as well. And I can bring in Matt from Berlin. So, Matt, let's have that conversation. Matt, was it Germany that was forced to hand over the powers to do the vaccine strategy, or did they volunteer to do that in the end?
No, everyone I've spoken to in the government has said they wanted to do it this way. They wanted to take a multilateral approach and ensure that everyone in Europe gets the same shot as a vaccine, not just that the big and powerful economies like Germany get the first shot. Now, a lot of people have come back and said, why didn't Germany get the vaccine and then divvy it out? Yeah. They just didn't think that was the right look and or the right strategy for the united Europe.
Before we turn to the German Finance Minister, Olaf Scholz, he's going to be joining Matt and I in just a moment. Matt, I think it's really important to explain to our audience what is happening in German politics right now. You have the Chancellor from one party, the Finance Minister from another party, And the finance minister is also the candidate for the chancellor position this year in the federal elections. So, Matt, how do these two people, these individuals within the German government, work together at a really delicate time when they're running against each other in several months' time?
You know, they actually work extremely well together, and I'm not sure that helps Scholz's bid to become chancellor. It doesn't make him extremely popular with his own party, just as Merkel's work with the SPD hasn't made her extremely popular with the CDU. Of course, this is her last year in power, and there's a vacuum to be filled. But the problem is no one party has an overwhelming majority.
Matt, brief us here on the generational shift. I brought this up for years, and it's wonderful to go back and do the history of the Berlin view behind you. For radio, Matt's got the lovely gate there behind him in Berlin. But Matt, what is the moment here right now with this new election coming at the end of the Merkel years? What is the moment of the generational shift in Germany? Where do we stand on that?
Well, I think the most interesting part of the generational shift here is that the Greens are no longer a bunch of kids, you know, who, if they were in America, would have gone to Lollapalooza. The party was really a 90s movement, an 80s and 90s movement. It has now become very much mainstream. They've overtaken the SPD, the center-left party in polling, and they approach, in some polls, even the CDU, the center-right party that has had so much power post-war. So really the Greens have shifted much more towards the center, and that's given them a huge block.
How does a Biden administration, Matthew Miller, change German politics? I mean, we all remember President Obama's, candidate Obama's movement, I believe it was, to Berlin and the historic recapitulation of the acclaimed Kennedy speech. Great. What's the political reality of a President Biden for the people of Germany?
Well, of course, President Obama was extremely popular here, and coming in at a time when America was not. After the invasion of Iraq, German-U.S. relations deteriorated a bit. Obama then repaired that to some extent, but you can't repair everything, and that's the case with Biden as well. Coming in after a president as unpopular here as President Trump is a relief to some in Germany, but some damage that has been done cannot be undone, and I think that's where we stand right now.
The damage also, how much can it be undone? The idea that the vaccination rollout is largely thought to have been bungled in the European Union. Before we let you go, how much has this undermined the whole idea of the European Union and public support for continuing within that?
I'm not sure that the polls are in on that yet in terms of support for the European Union. Many people, of course, are very angry about how slow the rollout has gone here in terms of the populace. When I talk to people, and I'm sure when you talk to people in global Wall Street, however, they say, although it's a disappointment for the next few months, it's not going to be something that we look back on in 2022 or 2023 and see any lasting damage from the unequal rollout of vaccines.
Matt, I know you're staying close. We'll catch up with the German finance minister imminently. Just in your view right now, going into this conversation with him, what's the #1 goal, the objective?
Well, I want to know what they're going to do to repair the deeper damage that has been done to the German economy by the extended lockdowns. They keep giving us dates of when the country's going to come out of lockdown, and every time we get close to one of those dates, they just push the goalposts back.
Matt, you'll be with us shortly. Olaf Scholz, standing by, German finance minister. He'll be with us in the next couple of moments, Tom, and that's going to be the conversation. The domestic reopening story, which, of course, is a case study for many countries across the Eurozone, Germany being the biggest economy. Then we have to talk about this vaccine rollout in Europe and just what went wrong in the last 12 months, Tom.
It's got to be front and center, but also here is the heritage of the United States and Germany. John, for our radio and TV audience across this nation, this is a relationship that has been underplayed in recent years. This guy was the former mayor of Hamburg. He attended the acclaimed Merkel dinner of 2011. He came to Washington to represent Germany at that important state dinner. This is a guy with real linkages to America.
I remember catching up with Guy Johnson shortly after the election and him saying something that I think was echoed around London, that there was a risk for London that the new president President Joe Biden would be much closer to Berlin in the same way that President Obama was, Tom, and whether we see a repeat of that in the next couple of years remains to be seen.
Well, we need to see that, and you know, we see it again today with this important trade amendment of 4 months with Britain as well. John, this will be a timely interview.
Coming up, the German Finance Minister Olaf Scholz. Looking forward to that conversation alongside Matt Miller as well. In the equity market, futures in 6, we're down a little more than 0.1%, ahead of those initial jobless claims in 34 minutes' time. Yields are lower by 2 basis points on 10s to 146. Heard on Bloomberg Radio, seen on Bloomberg TV. This is Bloomberg Surveillance.
What's the biggest mistake you made when you were a fresh MBA grad and looking for a job?
Make sure you try to do something that you're interested in and that you think you'll be good at. I just was on a path to law school, and I actually never asked myself why I wanted to go to law school. And I randomly went to an investment banking analyst recruiting event, and I figured out I had an aptitude for it. I was interested in the work. If you're not interested in it, and it's not something you're good at, the money will not justify it. I also think that there's nothing wrong with experimenting. Doing something that you always thought you might want to do, trying it for a couple of years, you can then go back down a traditional path if that's what you want to do. Try to remember what you want out of a job, where you want to live, what you want to get from it, from personal experiences, from development, from training, from fulfillment, from engagement in the community, and make sure you think about those things up front as you're recruiting and not try to evaluate it after you got there.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Catch highlights from the City Lab Global City Summit this weekend on Bloomberg Television. The conversation surrounding cybersecurity, urban planning, and transportation. Plus, special guest, U.S. Department of Transportation Secretary Pete Buttigieg and Vice President of the United States, Kamala Harris.
Cities big and small are the heartbeat of our countries.
The City Lab Global City Summit this weekend on Bloomberg Television and Bloomberg Quick Take.
It's going
to be a very difficult dance for the Fed and actually a very difficult dance for the bond market.
There's a real battle, I think, going on between what the market thinks will happen and the Fed wanting to say, look, hold your horses.
Global growth is going to move higher this year as we emerge into a new state of normalcy.
A big story going forward will be what happens to wage growth.
Goldilocks died probably a year ago. The era of low inflation and low rates and good growth is probably over.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene, a simulcast, Bloomberg Radio, Bloomberg TV, a day of claims in 30 minutes. That is important. Right now, what's important for me is we go to a key interview with the finance minister of the Republic of Germany, is John Farrow. I need to talk about a better tape, and I see it expressed in a dollar that could go out to new strength.
Looking forward to that conversation, Tom. What went wrong in Europe? That's the big story. Coming into the new year, there was so much excitement about synchronized global growth and Europe being a part of that. Not so much anymore, and that's why this dollar story gets more interesting, Tom. Dollar shorts into the year, sky high. We eat into them a little bit over the last several weeks.
So let's rip up the script here and go to what we're going to be talking about here. Sam Stovall on the equity markets in moments, but John Farrow, Olaf Scholz, and the others of Europe, what they don't want is a strong euro. What level do you see that in your research?
Well, I think we've seen it through 120, back end of August into September, and Philip Lane came out and said, I don't like it. 125, I think it's fair to say they definitely don't like it. And given what we've seen in the bond market over the last week and what we've heard from them, they tell us they don't like it. The real question is, what are you going to do about it? Because what they've done about it so far is not a lot. So the ECB is talking a good game. Do they follow through? The Federal Reserve has barely said anything if you're looking at Chairman Powell or Vice Chair Clarida. And that's the fate of the session today. Most people assume it's in the hands of Chairman Powell at 12 Eastern.
Lisa, an open question within your reading this morning. I know you've been reading in since at least 6:58 a.m. I mean, Lisa, thank you. Lisa, you look at where we are now. It's a cacophony. We're at a midpoint here. What is the research that shows direction forward?
Right now, I'm struck by some of the huge debates that are emerging. On one side, higher yields or lower yields going forward. That's emerging as a huge debate. And then the dollar is another one. And this out of the IIF, this Robin Brooks, the chief economist, coming out and saying that the dollar is incredibly overvalued. And he talked about one key element that we've been talking about with the opposite tilt, and that is the current account deficit, the idea that we are borrowing so much money in the United States to finance the recovery, and that actually creates a natural weakening for the dollar. People talk about this as a strengthening of the dollar because of the growth that it generates. But Tom, naturally and historically, the bigger the deficit, the weaker the currency. And that is a big conundrum right now as people try to figure out what the consensus is.
The twin deficit, my chart of the year, I think 2 of the last 4 or 5 years, it's an extraordinary deviation right now. John Farrow, what's so important and what Lisa says is the IIF with their representation of the major banks. I mean, dollar dynamics and yield dynamics can cut both ways.
Do you know who has
for
a big
banks.
current account surplus? Europe. Do you want to buy euro right now? Do you want to buy Europe? Just on that, is that reason enough to buy currency at the moment?
But euro on euro yen, come on, euro has been resilient versus a comfortably weaker yen for Japan.
Yeah, but this is about growth differentials, Tom, largely. And I just wonder if that starts to bite a little bit more.
We'll have to see on the growth differentials. And again, folks, what we're focused on is 5, 6, 7%. You wonder how that distills down into an earnings outlook. With futures -7, they improve. Dow futures 19 Dow points, John, and the VIX 26.43 this morning. Let's go to Samuel Stovall, CFRA Chief Investment Strategist. You know, Sam Stovall, I look at where we are, and as John mentions, the growth differentials. How do you interpret the GDP call for America as it rolls over into revenue growth and earnings adjustment?
Well, good morning, Tom and crew. Basically, I think that the GDP now forecast by the Atlanta Fed is a little bit too high for Q1. Expectations up about 10%. We're looking for something more along the lines of 4.8%. And when you really make the comparison year on year, it's Q2 that is likely to see the bigger jump. So we have a 6% expectation for the second quarter of this year, then moderating more toward the middle 4.5% for the rest of the year. So the feeling is that revenues are expected to be improving in 2021. Also likely to see improvement going into 2022, which people are now beginning to look at. So overall, the question is high, but how high?
All right, so let's go to the quote of the morning, in my view, which is Goldilocks is dead. Is it, or are we getting to an economy that's going to recover, but perhaps not run as hot as people expect, and it can maintain a sort of low-rate environment that can foster a market continuing to boom?
Well, I do think that Goldilocks is being pushed off to the side because we're looking at an acceleration in inflationary and interest rate expectations. We have already built in the expectation for a strong growth in earnings in 2021 that is really expected to be replicated in 2022. Looking for about 16% earnings growth in 2022 with revenues up about 7%. That's down slightly from expectations for 2021. But, you know, it's a little more challenging backdrop that investors will have to face.
All right, so let's talk about the on-the-ground nuts and bolts, what you're doing, how you're arranging. It sounds like you do see Treasury yields going a bit higher. Where do we go with particularly tech stocks, which have gotten beaten up of late?
Well, tech stocks typically, you know, depends on which yield curve you look at. Meaning, if you look at the 3-month versus the 10-year, tech stocks tend to do okay. On average, gaining 1.06% per month, going back to 1953 in a steepening yield curve environment versus 1.10 for the S&P 500. So a slight underperformer. But because we have had such a growth in the growth category of the S&P 500, at the end of August of last year, we were 35 percentage points above value on a trailing 12-month basis, which is the highest on record. So we're giving back a lot of that fraud.
Sam, I was waxing philosophical. Just one final question, Sam Stovall. We're going to have to run to an interview in Europe. But Sam Stovall, I was waxing philosophical last night about the acclaimed star system of Standard & Poor's and CFRA. 5-star stock, 4-star stock. How did that do in the pandemic? Or did it add value in the pandemic?
Yes, it did. STARS, or Stock Appreciation Ranking System, first came out in the late 1980s. Basically, it's saying, like a restaurant or a movie review, 5 is best, 1 is worst, 3 is going to be similar to the market. And I would say that during the pandemic itself, that was when our 5 stars shone the best. But I do believe that we sort of under-expected what the market was going to do, surging out of that pandemic trough. So we've had good days and bad days.
Sam, and I think many people underestimated how good GDP growth might be this year in America as well. Sam, great to catch up, sir. Sam Stovall, CFRA Chief Investment Strategist. That's the story in America. The story in Europe, much more complex. It's been a tough few months to roll out this vaccine, and now Germany has outlined some plans to gradually reopen the economy. I'm pleased to say that still with us is our colleague, Bloomberg's Matt Miller, and I'm very happy to say the German Finance Minister joins us now, Olaf Scholz. Minister, fantastic to catch up with you, sir. I just want to start with the vaccine strategy in Europe, which you've reportedly called, and forgive me for my language, sir, a real pile of crap. Is that a fair characterization of how you see things and how you've seen things play out in Europe over the last several months?
I think there was a problem in ordering enough vaccines in the last year, but now anyone is working very hard to work that we will have enough vaccines to bring it to the people, and this is what is organized in all the countries, also in Germany.
What went wrong, Minister?
It's just the one sentence I already said. There should have been more activity to organize more vaccines, and especially if you understand that most of the important developments for modern vaccines have been made in Europe, and 2 of the 3 big companies that develop new vaccines, Moderna and CureVac and BioNTech, are from Germany. So this is a good basis for doing the right things. But in the end, I think we are now on the right track, and anyone is working very hard in all the countries, and we are now vaccinating the people, and we are organizing that this will happen as fast as possible, and there will be, in a short time, millions of people that got the ability to have their vaccine.
Minister Scholz, considering that those companies are German, why didn't the government act to get them first, those vaccines, out to the German people right away?
I think it is absolutely clear that this is something that should be organized in Europe together, and it's also clear that this is something that should be part of an international collaboration which is working necessarily for saving the world. And as you know, we are already working very hard on international and global initiatives supporting those countries who have not the means to organize the vaccines for themselves, because if we want to fight successfully against the pandemic, it will be necessary that we give the chance to all the people on the globe. Coming back to Europe, coming back to Germany, I think we will make it.
Well, you're responsible for dealing with the damage done now by extended lockdowns to the German economy. Our reporter Birgit Jenin found that the government is considering as much as 50 billion euros in additional debt spending and supplemental debt spending in order to deal with the deeper damage from the extended lockdown. Can you confirm that?
We will do extra activities, yes, this is true, and we are able to do so. As you know, we were in Europe the first to fight against the pandemic with fiscal means. In the last year, we developed a very strong recovery program, and we managed a political activity that made it possible that the whole European Union is answering together to this crisis. The effect on the German economy is obvious. We are having a very good situation at the labor market, and it is much better than anyone expected the last year. We have a very good situation in the economy, and if you compare the development of the German economy to other countries in the world, you see we are between the best fighting against the economic consequences of the crisis.
Can I just push a little bit harder to get a figure here in terms of the additional spending that's necessary, Mr. Minister? Is 50 billion euros in additional spending necessary, or somewhere in that ballpark?
Your colleagues from Germany asked the same question to me, and I always gave them the same answer. You will see.
Minister, I didn't expect a new answer. Let me just follow up on the election that's coming up later this year. You're running against Chancellor Merkel's party. You have to find some kind of daylight between her and yourself on the pandemic. Where is the daylight? What would you have done differently that wasn't done?
Fighting against the pandemic is a common task of the whole government, and I think we have to be very hard in fighting against the health crisis, which is linked to the pandemic, and save the people. And this is what we do. And so I think it is not a good idea to do campaigns on these questions. But obviously, I think we need something which is a plan for coming out of this situation. And this is why I urged anyone to be very, very concrete on the question of testing and on the question of vaccinating the people. And I was also very strict in the question we discussed in the beginning, that there should have been more activity in Europe about producing and buying the vaccines.
Minister, forgive me for jumping in, because this is important. Most people would assume this will be a single-issue election this year. There is no other discussion in the global economy right now. Are you saying there's no difference between yourself and the CDU on the biggest issue of the last several decades in the global economy? There is no difference in how you would handle this crisis and how you would reopen this economy. There is no daylight whatsoever.
There are differences that are discussed, but to be very clear, it is a common task, and I am very much urging anyone not to do party politics in a question which is responsible, in a question which is important for the life of our people. This is something no one would accept. And there is something which is different to other countries. No one doubted that there is really a problem with the pandemic and the coronavirus, and no one doubted that it was necessary to fight against it. So there is a consensus on this question, also not just within the parties of the government, but also with the most of the opposition parties. And so this consensus is helpful for doing the right things now. And being a very honest politician, I think doing your task is the first thing if you are running for ruling the country. And this is the task we have now. And yes, we are the one fighting for the idea that this must be done, saving the economy, working on social cohesion, looking at the people who are suffering most and supporting them, and fighting against the health crisis. And this is what we have to do.
They are honourable goals, sir. Let me finish with this one, because there's a big problem in Europe developing on acceptance of the vaccine. Have you had the vaccine, sir?
I haven't been vaccinated because there has been an agreement on who will be the first and who will be the last, and the leading politicians are not in the first row. But any one of us said, and I do the same, that when we are at the stage where we will be vaccinated, have the chance to get the vaccine, we will take it. And I will take the one which is offered to me, and I will not choose one of the different ones, because there are a lot of very successful vaccines on the market.
Minister, thanks for your time today. We appreciate it. An important conversation on some really difficult issues, so thank you for your understanding. The German Finance Minister there, Olaf Scholz. Matt Miller's still with us in Berlin as well, so let's have the conversation, guys, about what's taking place in Europe. Tom Keane, a really, really difficult time. And politically speaking, how do you separate yourself from the government if you're running against the Chancellor?
That was a delicate answer. For those of you in America where we're saying Pfizer, Moderna, and I guess J&J's coming, John, it is not that way over in Europe, where there's a real fragility about which vaccine to choose. And the minister was very careful to say he'll take the one handed to him. We're not having that conversation in America.
Taking on the Chancellor's party, I should clarify, Matt Miller, it's going to be a difficult road ahead. Headline just crossed on the Bloomberg just to confirm that Olaf Scholz says Germany will need to take on extra debt in 21. Matt Miller, that's going to be the difficulty. How does that change from here on out?
Well, the good news is that Germany doesn't have a very high debt-to-GDP ratio, certainly not when compared to the U.S., and definitely not when compared to the peripheral states here in Europe. So the economy, the German budget, they're ready for this. They have been saving for a rainy day, and now that it's raining, they're ready to spend that money. I think Tom made a really important point, though, that also differentiates what the finance minister just said and what Angela Merkel has said in the past. She has said she will not take the AstraZeneca vaccine, and the Germans have really been critical about use of that vaccine for people over 65. Okay, Scholz is only 62, so it's not an issue for him, but I think it's a really interesting issue that's had effects on the share price of AstraZeneca and really had some ripple effects in the markets.
And on acceptance too. Matt Miller, good to see you, sir. Tom, just a massive issue that still needs to be ironed out.
Well, it is there, and it is a differential across the ocean, certainly the economic numbers, the things we look at in finance and investment. And also what we've tried to do now, pushing on a year and ever more, is the medicine of this pandemic. Giving us original leadership in February of last year was Peter Hotez. He's Dean of the National School of Tropical Medicine at the Baylor College of Medicine. He has been ubiquitous. I would suggest, you know, it's almost like Dr. Fauci, Peter. You have been everywhere giving us wisdom on the vaccine. Have you spoken to the governor of your Texas?
I've not had the opportunity to speak with the governor or his staff. Of course, I'd always welcome that opportunity, and I have in the past, but not over this latest issue.
Over the latest issue, it's important. I'm hearing anecdotally of people just literally trying to leave the state. They're so furious about this. And yes, there's people in support of the governor. What would be your counsel to the governor right now of the differential equations of more vaccinations, better statistics against his political philosophy?
Well, there are two reasons not to dial back masks and social distancing at this point. One is we've got this terrible United Kingdom variant, as some people call it. I call it the B117 variant that first arose out of southern England in September. And now the data showing it's much more aggressive in terms of its ability to be transmitted. And also now the UK government, although this second part's not been peer reviewed, the UK government's put it up on their website. It looks pretty compelling that the death rate's higher. So this is a bad actor, and it's racing through the country at a high rate. Really bad in Florida right now. Maybe 10-15% of the virus isolates are this B117 variant from the UK. And so we can, even though the number of cases has been going down pretty steadily, it's now plateaued, and now many of us think it's going to start going back up to be a fourth wave. That's issue one. And then second, vaccines are not here yet. That's been disappointing. Operation Warp Speed promised vaccines upon emergency use authorization for the J&J vaccine. That's not delivering. They will come. The president 2 days ago committed to having every American who wants to be vaccinated can be vaccinated by late spring, early summer. So that's good news. So hold off. Don't dial back the masks and social distancing right now. This is the very worst time to do it.
Dr. Hotez, this may be premature, but looking forward, based on where we are in the inoculation schedule, as well as the technology that's been discovered through this process, are we closer to the next pandemic or further away?
Well, I think we're closer to vaccinating our way out of this current one. And I say that because there's some exciting news that came out of Israel last week, published in the New England Journal of Medicine. We've known that 2 doses of the Pfizer vaccine and likely the Moderna vaccine as well can stop symptomatic illness and keep you out of the hospital or the intensive care unit, 95% reduction. But the data from Israel shows a 92% reduction also in asymptomatic transmission, meaning people who become PCR positive. So that's a game changer. It means that you can, enough people get vaccinated, and if the other vaccines have a similar performance, which I think they will, it means that we can halt transmission. And that means that we can vaccinate our way out of this epidemic in the United States. It means I don't know that things will go completely back to normal, but I would have a much more optimistic outlook, maybe even masks coming off later in the summer or fall. So a lot to look forward to. Now's not the time to screw it up by relaxing measures. You don't want people losing their lives before all the good things to come.
And I guess that Dr. Hotez, looking forward to the next pandemic, the post-COVID era, where we're still dealing with the different coronaviruses that could be out there. And frankly, based on some estimates, it's kind of amazing we haven't had a pandemic like this until now. Do we feel prepared to deal with it in a better way than we dealt with this one, which by many accounts really could have been handled a lot better?
Yeah, with that, one of the things that I always point out, that things have gotten better. With each pandemic, we do learn something. After SARS in 2003, we put in international health regulations, IHR 2005. After H1N1, the Global Health Security Agenda, and stepped up influenza surveillance. After Ebola in 2014 and Zika in 2016. At Davos, 2 successive Davos meetings, the Coalition for Epidemic Preparedness Innovation, CEPI, was launched. So each time we do learn something, we make incremental advances. This one, I think, will have more far-reaching effects because of how it's devastated the economy globally and how it's become a global security issue.
Dr. Hotez, as you know, there's always a kink in the smooth curves. If you take the wonderful smooth curve of the vaccination success of people like you, it's a curve down through the years. Where is the kink for you where we can say all clear? Is it at 50 years old? Is it at 48 years old? Do you have in your head 42 years old? Where is that tipping point as we move to young adults?
Well, there's no. It's really a gradual slope. But one of the things we've learned also is that even younger individuals with comorbid conditions can get pretty serious illness. The thing that worries me the most, quite honestly, is I think the U.S. is, other than this spring, which is going to be rough. I think the U.S. is going to manage its way. We'll probably see a third immunization with the Pfizer and Moderna vaccine, maybe tailored to the variants, maybe a second dose of the Johnson & Johnson vaccine. Don't be surprised if you see that happening. The thing I'm worried about is other parts of the world. Africa is scaring me right now because you have what's called the South African variant, the B1351. Now it's accelerating into Malawi and Mozambique and into Tanzania, and we don't have a lot to offer. Those two mRNA vaccines are still pretty fussy in their ability to scale up production and the freezer chain requirements. I don't think they're going to have a big role in helping Africa. The AstraZeneca vaccine is a good vaccine for the UK variant. It looks like it's not working against the South African variant.
Yeah.
The Merck is out. So when you go down the list, we don't have a lot to offer the African continent. We're trying to scale up aggressively our recombinant protein vaccine, but I'm really worried about the destabilization of Africa right now.
Doctor, you have touched on the issue, I think, and we appreciate your time, and let's continue the conversation in the weeks to come. Dr. Peter Hodes there, Dean of the National School of Tropical Medicine at Baylor College of Medicine. Tom, that's the problem. It's a global pandemic, and Africa in particular is really suffering right now. And I think the message that governments around the world need to get across as well is that it is a global pandemic, and yes, we can reopen parts of the economy in places like America, but opening international travel anytime soon, getting back to normal on that front, incredibly difficult.
Particularly with the keyword international there, John. You know, I really want to just say, John, I look at the data about every 3-4 days. Yeah, Africa's ebbed, but I'm listening to Dr. Hodes on his focus on Africa.
As are we all. Coming up on this program, jobless claims in the United States of America. Going into that, equity futures recovering. We're negative about 3 points and down almost 0.1%. Mike McKee dropping by to break down the numbers, and then Ethan Harris of Bank of America. Heard on Bloomberg Radio, seen on Bloomberg TV. This is Bloomberg Surveillance.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Bloomberg.com webinars.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Jobless claims coming up in the United States of America. Going into that print from New York City this morning. Good morning. Alongside Tom Keene, Lisa Bravitz, I'm Jonathan Ferro. Equity futures down 3.5 points on the S&P 500, down around about 0.1%. That data dropping imminently. Here's Mike McKee.
Well, John, we're just waiting for the numbers to come in here as everybody clicks on the Labor Department numbers as fast as possible. We can tell you the revisions to productivity are in negative 4.2% in the fourth quarter. That is better than the negative 4.7% forecast, but it's not going to move a lot of needles. The jobless claims number now out 745,000, so just under the forecast of 750,000. That's up from 730. Initial print last week, and it does suggest that what we saw was maybe a holiday and storm-induced decline in the jobless claims numbers during the week prior to this. So at this point, we're kind of on status quo in terms of jobless claims. They're coming in elevated above 700,000 and well above. That's about 100,000 above the highest we'd ever had before the pandemic.
Michael McKee, Econ 101. How do you dovetail claims into what we see tomorrow? What's a correlation of weekly claims data with the monthly two-study series we see tomorrow?
Well, there isn't really a complete correlation because claims are telling you people lose jobs, whereas Friday we're counting the number of jobs that were gained. But in general, they move in opposite directions. So if people are falling off the claims report, then you would expect more jobs to be created. But at this point, it's kind of hard to say because we're in such an unusual situation.
Unusual, inaccurate, hard to really nail down. These are some of the ways that we've characterized the labor market data that we've been getting. At what point can we actually count on it to mean something?
That's a hard question to answer, Lisa, because, the Fed is not even looking at unemployment anymore. They're looking at enhanced unemployment, employment to population ratios, because they're trying to figure out basically how many people are out there who lost jobs who can't get jobs back. That's the answer to the Fed conundrum. When they do anything about rates is if people can come back into the labor force and get jobs, the labor market tighten, then we would see inflation. You'll hear Jay Powell talk about that maybe today. Until we know, get a better handle on the number of jobs that have been lost permanently, it's going to be a little hard to tell.
Michael McKee, wonderful. And of course, Mr. McKee running all of our economics will have perspective on Chairman Powell's comments later today. Right now, and this is a joy, Ethan Harris with a wonderful performance for Bank of America Securities as their head of global economic research, particularly coming out of 07, 08, 09, way out front of the market economics curve. And also, I should point out, an author of a book on the shift from Greenspan to Bernanke. We're in another shift right now, maybe a presumptive shift of how long Chairman Powell will be here. So let's talk to Ethan Harris about the Fed today. Dr. Harris, in your book on Ben Bernanke, you talked about a demystified Fed. You talked about the secrets of the temple. What are the secrets of the Jay Powell temple?
Well, Jay Powell in some ways is a continuation of this new generation of central bankers where you no longer have these Greenspan decoder rings to try and figure out what the heck he's saying. You try to be more transparent about exactly what you're up to and very clear about the direction of policy. What's changed a bit under Powell is I think the Fed was very frustrated by their inability to hit their inflation target in the last business expansion. So they've adopted a very aggressive approach here that focuses on, first of all, making sure that the financial conditions are very, very loose, Second, promising to overshoot the target. They're saying if you're going to have an average target of 2%, you have to overshoot part of the time. So doing that as well. And they're also saying they're going to take a broader view of the labor market and focus on how disadvantaged workers are doing. So under Powell, in all of these respects, the Fed's kind of taken another step towards a more aggressively dovish approach. And so it's partly a continuation, but partly a reaction to their failure to get inflation higher or at least hit their target in the last business cycle.
Ethan, it's the question of the moment then. What's on the new dashboard? The data they're looking at has changed. The data we have to look at then should also shift too, to some degree. What's new?
Well, I think Mike has it right. I mean, it's about the broader measure of the labor market. Are we getting people to come back into the job market and employing them as well as the people who are currently looking for work? And so just looking at the traditional unemployment rate doesn't work. The problem with jobless claims is that they're really moving around a lot because there's so much cross currents in the economy. Claims will be a better indicator when the economy is more normal and we're reopened and everything else. But right now they're a bit of a mess. And so the Fed really wants to be sure that they're taking a broad view of the market. I'd say things like the U6 unemployment rate, which some of your audience may know, it's a broader measure of unemployment. That is probably the one indicator I would focus on, as opposed to the official U3 indicator, which doesn't include some of these marginal workers in the calculation. So, yeah, it's just a broader set of indicators.
To think, Tom, we're 12 months into this mess and we're still seeing claims numbers at 745. It's amazing. And Ethan's speaking to that. The massive churn beneath the surface is still huge.
Yeah, we're done by it. But I got to do a surveillance question now. And Ethan Harris knows better because he's been such a support of what I've done for umpteen years. Dr. Harris, all of our audience on radio and TV know the U6 series. Not some of them. They all know the U6 series. And John Farrow, they know it's the only way to go.
They do, but I wonder if you have to go another way as well, Ethan. Employment to population. Do you have to look at that a little bit more too? Is that helpful?
The Farrow twist.
Yeah, no, that is true, and that is another angle on it. The U6 will capture some of that, but not all of it. So that's another one of the keys. So Tom, your audience needs to know about that employment to population ratio as well.
Well, how do you quantify, aside from these ratios, the inefficiency baked into the churn beneath the surface? We talk about the whether services are open or not, whether restaurants can open or not, but there also has been a huge technological shift that's been accelerated throughout the pandemic. I mean, where are we seeing the inefficiencies of retraining people and getting people hired into new positions in the labor market metrics?
Yeah, I mean, it's going to be painful because you've had a lot of people out of work for a long period of time. Businesses are thinking harder about using technology instead of employment. So as we come out of this crisis, it'll be a bit harder to get all those people back to work. And in addition, not only have you had people who've been out for a long time and therefore lost some of their skill set, but then you have all these people who've had delays in effective education coming out, and so they need to stay in school a bit longer. There's some scarring from all of this going forward, but I think that the outlook's still quite good because you do have a massive monetary and fiscal stimulus. It's going to, help to heal those wounds pretty fast.
Do you agree with Janet Yellen that if the $1.9 trillion stimulus gets passed, that we can get to full employment by next year?
Yeah, I do. I think that this is going to be the fastest recovery in history. We need to remember how big what they're doing is. It's not just the 1.9 trillion. They did 900 billion in December. They're probably going to be doing a big infrastructure spending plan probably sometime late in the year when we get into a new budget year. And then the thing that I don't hear the Fed talking about as much as they should is all that leftover stimulus money from last year that's sitting in people's bank accounts. I mean, there's $3.2 trillion of checking, savings, money market funds above normal levels that's built up because people couldn't go out and buy services and they're getting big checks from the government. So that's a lot of dry powder. yeah, I think that we are going to have the fastest return to full employment ever.
I want to note red and green on the screen. The Dow goes to green right now as we look at futures here. Dr. Harris, I've got a, you have the privilege of working with Michelle Meyer, which is, a pretty good thing. She's exceptionally acute, and her original claim was on real estate. What's the state of real estate in America?
It's good. I mean, as you said, she over the years became quite the expert on that. It's good. I mean, you have a lot of momentum in the real estate market. Obviously, there are areas of trouble, right? So a decreased demand for apartments in inner cities. Certainly, that's a New York issue if you look at what's happening to rents in New York. But generally speaking, high demand for single-family homes, rising home prices. Now, we do think that will run out of momentum next year. Not quite yet, because we are in an ongoing rise in mortgage rates and bond yields. This rise in 10-year, while it was very unstable and people got very excited about it, actually, there's very strong fundamentals behind higher rates. So housing should move from being kind of one of the leading drivers of growth to more of kind of a flattish outlook next year. So it's okay now, but some flattening out next year.
Ethan, great to catch up. Tremendous research, as always. Ethan Harris there, Bank of America Securities Head of Global Economic Research. Your market just turning positive on the S&P 500.
Yeah, look at that green.
In the last moment. Just a little bit of green for you, Tom. Should we run through the estimates? 198 is your median tomorrow. 198. The range wide, as always. 500K the high, negative 35 the low. 112 from BBVA. Let me just throw some out. 100 from Barclays. All the way to the top of the pile, Tom. Capital Economics, 500K. Citigroup looking for what? 410. SocGen in the mix with 350.
Yeah, I mean, the dispersion's always there, but what's fascinating to me, John, is just where are we on GDP as it links in to jobs? And I'm going to go back to what we heard from Tom Porcelli of RBC Capital Markets here to Dr. Harris with the Bank of America. What does this mean for wages, which is a massive, if not key determinant of future inflation?
Stay tuned as this economy picks up through the year.
Stay tuned is the right phrase.
We'll catch up with Wells Fargo
you meant for your
Head of Equity Strategy, Chris Harvey.
I'm sorry.
I was using it two different ways,
thinking.
Tom. Just building a bridge. Building a bridge.
Nice bridge.
Thank
nice
you.
Security.
Coming up on Bloomberg TV, Chris Harvey of Wells Fargo, and a conversation you don't want to miss with the Delta CEO coming up shortly on this program, Tom. So that'll be interesting. From New York City, alongside Tom Keene, Lisa Abramowitz, I'm Jonathan Ferro. Heard on Bloomberg Radio, seen on Bloomberg TV. What else? This is Bloomberg Surveillance.
With the first bad news, I'm Rishika Gupta. The Senate isn't likely to approve President Biden's coronavirus relief package until the weekend. Lawmakers are waiting on an official cost estimate of the latest version. Plus, Democrats are tweaking the measure that was passed by the House. The president agreed to moderate demands to tighten eligibility for the $1,400 stimulus checks. And President Biden is struggling to head off a potential crisis on the southern border. A spike in migrant crossings, especially by unaccompanied children, is threatening to overwhelm government shelters. Republicans and some Democrats say the president's policies caused the surge. He says it's not a crisis. And Lufthansa has posted a record $8.1 billion loss for the year, and it says it will struggle to break even before the end of 2021. The pandemic has forced Europe's largest airline group to dial back capacity plans to a level where it's unlikely to make money. Here's Lufthansa's CEO.
We are convinced that it's now time to replace restrictions and quarantine rules by digital international testing or vaccination certifications. And that's worked on in Brussels, that's worked on behalf of our industry, and that will allow our customers to travel again this summer.
Federal Reserve Chairman Jerome Powell is likely to push back today on bond markets' doubts about central bank's policy. Skeptics are questioning whether the Fed will be ultra patient in pulling back its support for the economy once the pandemic has ended. Powell will make an appearance at a Wall Street Journal webinar. Global news 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Going to be a staggered return. All the destinations aren't going to open up at once. Different destinations are going to open at different times. And so there will be plenty of pent-up demand, as is evidenced by the bookings already. As you look at late 21 and first half, second half 22.
Good morning, everyone. Bloomberg Surveillance. We welcome all of you on radio and television. Arnold Donald there with Carnival on the Price part of a travel industry. What is certain is all of airlines have struggled. We heard from Lufthansa earlier of their struggles within Germany. In America, it has been a whole different set of battles, the ups and downs of the last 12 months. Ed Bastian drives a horse at Delta Airlines. He comes to it with an immense financial acuity, including his time at Pepsi Frito-Lay. Ed Bastian is the one that has kept Delta going, and particularly Caroline Hyde, with the romance of the Delta flight from Detroit to Shanghai. It is one of the joys to go to Detroit, you get on the Delta, and you show up in Shanghai. We've done it too many times.
You paint that picture so vividly. We're all so desperate to get back to that international travel, that domestic travel, as much as we wish, Tom. And I thank you so much for your time now, Tom Keene, giving it to Ed Bastian, the CEO of Delta Airlines, who joins us now, because we're talking not only the reopening of travel, but also your commitment, your March 2020 commitment, $1 billion no less, to become the first carbon neutral airline. And today, Ed, when you're announcing details of just how to achieve that vision, you're purchasing offsets to the tune of 13 million metric tons of carbon emissions to ensure that last year, the 2020 from March to December was indeed completely neutral. You're investing in sustainable fuels, announcing partnerships with MIT, corporate customers. You want to have zero impact aviation. How hard is that to do that in a year where your business model has been so wreaked by COVID?
Well, first of all, thanks, Caroline, for having me. It's great to talk to you again. You know, the pandemic has exposed a lot of vulnerabilities throughout society, throughout our world, things that we've taken for granted that we'll hopefully never take for granted again, such as our health and the resiliency that we have in our businesses. And if we're going to protect our health, we also have to protect our planet. So when you think about sustainability, that's what it's all about. And yes, it's a massive challenge. I was really proud of our company a year ago, basically to this month, that we made the commitment to be the first carbon neutral airline globally. And we've made the investments, despite the financial challenges we have had this year, to mitigate all of the carbon dioxide emissions that this company produced over the last year, just recently with some investments we made in reforestation and protecting the environment in places such as Cambodia and Indonesia.
And is it a competitive advantage to do this?
I don't think it's a competitive issue, Caroline. It's the right thing to do. It's a smart thing to do. Customers are looking for us to do that. We announced recently 2 major corporate customers that we're going in partnership around sustainable aviation fuels, Nike and Deloitte, for example. But I think this is good competition. I think it pushes us all, not just in the airline space, but globally, to create a better planet for generations to come.
And I love in the release, you talk about how traveling the world and saving the world shouldn't be mutually exclusive. Talk about traveling the world right now. How is the reopening process? Is the worst for your industry behind you now?
I hope so, at least in the U.S. On a global basis, I think our business is still probably 12 months away from being able to reopen at any kind of scale that we're talking about. Within the U.S., case counts are coming down fairly dramatically. We're looking at the vaccinations continue to accelerate. We're at about 16% of the U.S. population that's had at least one of the 2 shots that are available, and that's growing by the day. And as a result, consumers are having confidence in booking their spring and summer travel plans. So we've said a number of times, it's always darkest before the dawn. We're starting to see some glimmers of hope shining through this darkness. And I think they're real glimmers of hope that we're seeing. And I expect this summer, we're going to be traveling at scale in the U.S.
Kudos to you, because you partnered with the state of Georgia to open up your campus for COVID vaccine to be made available. There is a fast pace of vaccinations. Will you be able, do you think, to lift that blocking of the middle seat come May?
Well, we're blocking it through April. We'll be deciding soon and announcing soon what our plans are as we head into the spring and early summer. At some point, clearly, we're going to start to sell those middle seats. Demand will require it, but we don't want to stop short of when customers really are comfortable getting out and traveling again. The blocking of the middle seats only been one of many things we've done to restore consumer confidence over this past year. And it'll be an important decision that we take, but we'll get there when consumers are ready to start purchasing those seats, which I hope by the summer they will.
And do you think the purchasing of seats will be made easier, better, stronger by stimulus in the US, by the checks that might land on people's doormats?
We know consumers in the U.S. have a considerable amount of pent-up demand. We know they've also, many of them, not all, but many of them have also been able to accumulate some additional savings over this past year as they've suspended many of their activities. I expect they're going to be ready to get their life back this summer. I know everyone I talk to is already thinking about the first or second trip they're going to take, who they're going to be with, what they're going to see, what they're going to do. And it's bringing anticipation and hope back. We're a world that has lost hope and lost the benefit of anticipation over this last year to be able to look forward to something. I see that coming back here real soon.
Well said. Lastly, a quick one for you, Ed, on terms of for your projections, break even in terms of cash flow in the second quarter, report a profit in the third quarter, the glimmers of hope becoming a reality there too?
You know, it's still a little bit early to confirm that. You know, we're not into this. Yes, I continue to be optimistic that we will get to that break-even level on cash for the second quarter, which is the spring coming up. And then for the summer season, we should be profitable, assuming the vaccinations continue to roll out. Again, domestically, we're going to be traveling at scale. I really do believe it's going to be a robust summer travel period, great bargains out there for consumers. So I encourage everyone to look and get your plans locked in as quickly as you can, especially on Delta. And as we think internationally, unfortunately, I think Still probably about a year away.
Wow.
Ed, I need no encouragement. I know the entire team needs no encouragement to be back on international flights, on domestic flights. We thank you so much for painting that vision for us. Ed Bastian, the Delta Airlines CEO, sending it back to you, Tom.
Caroline Hyde, thank you so much. Looking at the markets right now as we advance to Chairman Powell. Lisa Bramwitz, red and green on the screen. That's better than what we saw 2 hours ago.
Yeah, yield higher though, and this was interesting because earlier they were lower and just kind of showing the momentum with price down, yields up as people look toward that better future where everyone can get on a plane.
Real yield comes into a better statistic. It was a negative 0.76, now negative 0.74. You need to stay with us through the day on Bloomberg Radio, on Bloomberg Television. Interesting markets wrapped around the conversation of the Fed. David Weston, he is the Secretary of Agriculture. Secretary Vilsack, look for that. This is Bloomberg. Good morning.
These solar arrays that we're going to install are going to be about half the size of the existing solar arrays that we have on the International Space Station. But because of the advances in technology over the years, they're going to provide about twice the power in just half of the area that the existing solar arrays cover.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of specs. We remain very confident on the competitiveness of the Hong Kong stock market.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
A little stability going into Chairman Powell from New York City for our audience worldwide. Good morning, good morning. The countdown to the opening bell starts right now. With futures unchanged on the S&P, we begin with the big issue. Investors looking ahead to Fed Chair Jay Powell.
here's the big picture.
Volatility in the bond market.
A tug of war here in Treasuries. That move in real yield.
We're starting to see economic growth pick up.
Supply-demand imbalances.
No doubt the inflation's going up.
The market has responded by, pushing inflation expectations and rates a little bit higher.
There's a battle right now between the Fed and the market.
Where rates go, where credit spreads go, if the equity market behaves, does volatility behave?
The market's trying to push the limits of the Fed.
The game that we're playing here.
The Fed's not going to take the bait on this one and overreact.
The Fed has made it crystal clear that they have a dual mandate.
They now really have to communicate and let the market know that they're going to be on hold.
Powell and Yellen are still leading the charge on this.
All eyes, as you say, will be on his speech.
Something has to happen for the central banks to step in.
They're willing to outdove the doves.
Let's bring in the Bloomberg team, Kelly Lyons and Michael McKee for more. Morning, Kaylee.
Good morning, John. Well, ahead of Powell's remarks, we are seeing some signs of stabilization in the bond market after the selling we saw across sovereign bonds globally yesterday, really led by gilts in the UK after the government announced larger than expected issuance that bled into treasuries with a 9 basis point move higher over the course of yesterday. And today we're basically unchanged from that level right now, sitting at 1.48% on the 10-year yield. That is almost 57 basis points higher than where we started the year. A move, of course, also driven by expectations for more fiscal stimulus and economic recovery driving growth and inflation. At the same time, real yields, which we were just looking at there, have come up about 34 basis points. Yes, we're still at negative 76 basis points, but it's the velocity of the move that the market is paying attention to. And then we have to talk about inflation expectations. We were just looking at the 10-year break-even rate sitting around 2.22%, but the shorter term inflation expectations were the standout yesterday, a re-rating higher of market-implied inflation expectations when it comes to 5-year break-evens, breaking above 2.5% for the first time since 2008. Yesterday, we are just off of that right now. Of course, part of that has to do with higher oil prices, but it is a dramatic move nonetheless. So that's where we stand right now. Of course, we have to put all of this in the context of history. Even at 1.48%, 10-year yield, still very low relative to history in a downtrend over the last 40 years, of course, along with the Fed's target rate, which Jerome Powell has tried to stress is staying lower for longer. And as long as the Fed holds near zero, there is a question of how much higher bond yields will be able to move. But the question is, does the market force the Fed's hand on that front, John?
Katie, it's a big question. Thank you. 10s at 148, 30s at 226, call it 227 in a single basis point on the session. Mike McKee, 12 Eastern, the one to watch.
A lot of people on Wall Street are going to be watching that. Every trading desk in the city is going to be tuned into that. The Fed chairman and his colleagues have been at pains to say that we're going to keep rates lower for longer. They're not going to change policy this year. But as Kaylee outlined, the markets don't seem to believe him. So his message today, drive home the idea that the Fed is on hold, committed to lower for longer, and give no hints at all that they're going to change policy for any reason. Now, the Fed is confronted with two problems. The one that Kaylee was talking about, the rise in interest rates at the longer end, as some investors price in a faster recovery and the possibility of greater inflation. But you can also see on the lower chart there, they've got the opposite problem at the very short end, as a shortage of T-bills pushes some overnight lending rates below zero. Expect the Fed chair to repeat his message from congressional testimony last week. The steeper yield curve is what you'd expect to see with an improving economy. Higher inflation is what you would expect, and they know that. He won't hold up a chart, but if he did, there is one he might use. Inflation is rising. The note yields also were rising. The note yields also were rising as 2020 began. We may be higher than we were at the beginning of 2021, but we're not as high as we were at the beginning of 2020 before the pandemic, and both collapsed because of that. The trend is now just getting us back to where we were. The short end could be an issue. It's not related to the economy, but to the Treasury Department selling fewer T-bills, running down its cash balance makes it harder to get collateral. Powell may say the Fed is watching it closely, particularly keeping an eye on the Fed funds effective rate. If that starts to go down, they could take action to try to prop that up. But don't expect commitments. The next Fed meeting's still 2 weeks away.
Mike, 2 weeks to go. What do you make of that messy ISM yesterday? What was your read on that?
Well, the mess was really in the prices paid because we saw a big jump in services prices, which is unusual given the state of the services industry. And so at this point, you got to keep an eye on that. The issue is, again, though, is this a supply problem that is going to be solved eventually, and we're going to see inflation rise, as the Fed expects, and then fall back again, as the Fed expects.
Mike McKee, some people expect maybe it keeps climbing. Mike, great to catch up with you, sir, as always. Your expectations for GDP, looking at the terminal screen right now, ECFC Go, the function, these are the economists surveyed by us, looking for 5% GDP growth in 21, and then the rollover. It's the what next that matters. What happens in 22? 3.7%. On inflation, this is a market in various parts. There's a huge debate about this right now, who think that inflation will creep higher and maybe it forces the Fed's hand. I'm often reminded of the great philosopher Mike Tyson. Many people have told me and repeated that line that everybody has a plan until they get punched in the face. And then things change. Megan Green of Harvard Kennedy School joins us right now. Megan, it's amazing, isn't it? The Fed's telling us what they think will happen. They agree with many of us, economists like you. Inflation's going to creep higher. They're telling us what they will do, which is nothing. It will fade. And yet market participants are still thinking that maybe, or at least some market participants think that maybe the Fed will blink. What's your take?
Yeah, so it's really rare that markets are kind of bullying the Fed to hike rates. Usually the markets bully the Fed to cut them. But I do think because we haven't seen persistent inflation in so long and no one's been positioned for it for so long, that markets are starting to figure out maybe they need to change that and are probably overdoing it. Though, as you point out, if you look at market-based inflation expectations, markets expect inflation to go up to what, 2.5%. That's not really anything to write home about. In fact, the Fed would be the first to break out the ticker tape if we actually achieved that. And I agree with Mike. I think that, when Powell speaks later today, he'll mostly rely on open mouth operations, and we'll just say, we're staying where we are. I also think that of the two issues that Mike outlined, it's actually the long end of the yield curve that the Fed is less worried about. It's the short end that I think the Fed is and needs to be a bit more worried about. And there, I don't think we'll get anything immediately, but if the Fed funds rate were to be dragged down as well, the Fed could make some technical adjustments on IOER and the reverse repo rate to kind of inch it up a bit. And I think the markets would take that in their stride.
Megan, I'd love for you to build on that because I think it's important. We saw several moves across the yield curve, a lot of moves across the yield curve, particularly on Thursday, huge amount of volatility through the belly and out to the long end. And then you had this other thing taking place at the short end when we were starting to price in more rate hikes. You've pointed out that maybe they're a little bit more uncomfortable with the latter story and not the former. How do you think Chairman Powell goes about addressing that a little bit later today?
I think he might mention it. I don't think he'll want to draw attention to it. But the Fed doesn't want the short end to go negative. That becomes very complicated for money markets. And so, there are tools that the Fed could deploy in order to inch that back up. One, as I mentioned, is the hike IOER and the reverse repo rate, which the Fed has actually done before. There is precedent for that. So it could just be, viewed as a technical adjustment. The Fed could also just set up a standing repo facility, which many of us argued for back when we had that repo rate spike over a year ago now, but that's another way to try to address this. But as I said, the Fed controls the Fed funds rate, right? So they're supposed to be in charge at the short end of the yield curve. And so it is a little bit worrisome that the short end is creeping lower when the Fed doesn't want it to. The Fed isn't supposed to control the long end. And so it's all right if the 10-year goes up or the 30-year goes up. It's based on things that the Fed does, but the Fed's supposed to master the short end. I should also say that a lot of people are talking about yield curve control as a way for the Fed to also master the long end, and I think they'll avoid that altogether because, as the Bank of Japan has shown us, it's a bit like Hotel California. Once you engage in yield curve control, you can't really get out of it, and the Bank of Japan pretty much controls the whole yield curve, which makes it very difficult for fixed income traders. And so I think the Fed will avoid that, given the U.S. has the biggest, most liquid asset class, the Treasury market. So they won't want to control all of that.
The RBA has shown us it can be difficult and complex to execute as well. Megan, I want to wrap things up with the commodity market. Crude higher today up 1.9% on WTI and on Brent, $65.27, $62.40 on Brent and WTI, respectively. The only developed market central bank that I can remember hiking interest rates because of higher energy prices in recent history was Trichet over at the ECB. The world's changed, Megan. How much of what we're seeing play out is just a commodity story?
I think a lot of it is being driven higher by oil in particular. And, the Fed officially looks at core PCE, so they're stripping out fluctuations in commodity markets. The ECB doesn't officially look at core inflation, but effectively they do. So I think that lesson has actually been learned by the ECB. I don't think we can expect a repeat of Trichet's move. Also that, history hasn't been kind to that move.
Megan, always great to see you. Thank you. Megan Green there of the Harvard Kennedy School. We'll stay on the energy story. Coming up, a view from the C-suite. Looking forward to Alex Steele catching up with the ExxonMobil CEO, Darren Woods. Alex dropping by in a couple of minutes' time. Don't miss it from New York City this morning. Good morning. 20 minutes away from the opening bell. We're counting you down to Chairman Powell as well. This is Bloomberg.
Of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
For our TV and radio audience worldwide, good morning. This is the Countdown to the Open. I'm Alex Steele. The last 5 months have been historic for Exxon. After unveiling a lower capex plan and capital discipline in November, the stock has outperformed the S&P by its widest margin in decades. Now, yesterday at its Investor Day, Exxon hit another milestone by kicking off the presentation and talking about low-carbon investments. Now, European oil majors like BP plan to get out of the oil business altogether, while Exxon is focusing on carbon capture and new technologies to help green oil. Well, joining me now, the man behind it, Darren Woods, CEO and Chairman of Exxon. Darren, it is a sincere pleasure to talk to you today. Thank you for joining me.
Thank you, Alex. Glad to be here.
Oh, like I said, investors really like what you guys are doing. The criticism over the last 24 hours, however, with analysts is that they think you're going to be increasing your capex in 2022 sequentially. And the big question is, why do that if investors love what you're doing right now?
Well, we put out a story yesterday as we talked to the investors about both the near, medium, and long-term challenges facing the business and how we are trying to strike the balance between what's going to be needed in the short term, the medium term, and the long term. As you mentioned in the Investor Day, we started the discussion by talking about what the future would hold out to 2040. We used the intergovernment panels on climate change, the UN's body, who's kind of an authoritative body around climate change, to look at 2040 and the energy systems there. And the point we made was was even in 2040, in a 2-degree world, that the energy system was still going to be made up of almost 50% oil and gas. And so there is a continuing need for oil and gas, particularly in hard to decarbonize sectors of the economy.
Yeah.
And so if you couple that need with the depletion curve, so as we produce oil and gas, the supply declines, and that depletion curve takes you out to 2040. If there are no more investments in oil and gas, we won't have enough oil and gas to meet the needs, even in a 2-degree world. And so part of our plans are focused on making sure that we're making the investments in advantaged projects so that we'll have the production needed by society as we work in parallel to transition to a lower carbon economy.
Yeah, Darren, I don't think that the worry is that you weren't going to be investing. I think it was the rate with which you were going to be investing, in that why not wait 2 to 3 years, go for growth a little bit later, and just focus on the balance sheet and dividend instead?
Well, if you look at the charts that we presented yesterday, one of the points that we made is the investments that we're making between now, 2021 and 2025. When you get to 2025, 40% of the cash available to the corporation will be from those investments that start up in that 21 to 25 timeframe. So that just illustrates the importance of investing to offset the depletion curve. At the same time, we're high grading our investment portfolio. So we're actually not growing volume in the plans. Our plans basically call for relatively flat volumes, but improved productivity, higher earnings, and higher cash flow for the volumes that we're producing. So it's not so much of a volume growth story, it's an earnings and cash flow growth story.
So one more question on this one. Some of the activist investors that had been involved, like D.E. Shaw, they had wanted even a lower CapEx than you guys even came out for this year. They support the new board nominations, etc. Do you anticipate, though, maybe more of a focus on cutting CapEx from the new board with a different set of priorities?
I think, the challenge in this space is, and I've used it many times before, striking the balance. So if you look at the priorities that we have as a corporation with respect to capital allocation, first of all, making sure that we have a pipeline to grow to offset the depletion in the business and to make sure that we're evolving and meeting the demands of society as those continue to evolve. So the investments that we're making today, we're investing in refineries that change the production profile to match the evolving demands in society. We're investing in chemicals to make products that support modern life and are continuing to grow. And then we're investing in more profitable barrels, lower cost of supply to compete in a long market. And so those three priorities within our investment portfolio end up with a group of projects that deliver more than 30% return. And so I think that the foundation for the investments are sound. And of course, the work is on looking at how you position yourself longer term to deal with the transition, to deal with the demand for less energy intense, less emissions intense energy. And that's the work we're doing in carbon capture and storage and looking at technologies to help abate emissions in these hard to decarbonize sectors of the economy.
Yep, we'll get to the carbon capture in just 1 second, I promise. Just one more question on the balance sheet and the new board makeup and sort of how their priorities may or may not differ with the ones that are currently there. What's the likelihood that the new board might revisit a dividend cut?
Well, we come back to the three priorities that we have. One is the investment in the longer term. One is maintaining a strong balance sheet so that we can manage through the ups and downs of the cycle, which we used to our advantage in 2020. And then third is to return cash to the shareholders. And that's been a big part of our dividend policy. Obviously, we talk about that as a board every quarter and continue to look at how we strike the balance between those three pillars within our capital allocation program. So it's a continuing discussion, and I think our new board members are bringing the perspective of how we effectively allocate capital to make sure that we're positioning the company for success longer term.
But as of now, that hasn't been discussed with the new board members?
Well, as I say, every quarter we talk about the dividend and the investments that we're making and the drive to deleverage. So that capital allocation and the projects that we have in place and positioning ourselves to be successful, that's a fairly consistent and ongoing discussion with the board. In fact, last year, as we went through responding to the pandemic, we put together a plan and spent a lot of time at the back end of the year going through all the elements of that plan, including the dividend, including the balance sheet and how we releveraged and or deleveraged and the investments that we're making longer term.
All right, let's finish up with more carbon capture conversation. When are you going to be able to take final investment on your next project for carbon capture. Can you give me some insight into how you're thinking about that in a longer-term investment thesis?
Yeah, well, maybe, Alex, just to put a little more context around the work that we're doing there and the business that we launched on the low carbon solutions, there are really 4 critical elements that are going to make that business and carbon capture an important part of the solution going forward. First and foremost was the available technology today for carbon capture is fairly high cost and requires fairly concentrated sources of CO2. And so one of the big challenges in making that a technology that works more broadly and can be deployed more broadly is to lower the cost of that. And we've been working on the technology side for about over 10 years. Another important element that's required is government policies that make sure there's a transparent and explicit price on carbon that incentivizes those investments, regulations that support the investments, and the infrastructure required, legal frameworks, and a number of things from a government standpoint. We're seeing more and more focus from governments in this space, which is encouraging. We're seeing tech funds, so venture funds investing in this space, looking for opportunities to invest in carbon reduction opportunities. This is, I think, an opportunity for our low carbon solutions business. And then the fourth area is the demand for carbon and carbon offsets. As the economy works to decarbonize, they're looking for opportunities to find carbon offsets to help them achieve their objectives. You put all that together, it's converging at this point in time. It gives us a great opportunity to start a business to try to drive that. But those things have to work together and come together, and that's going to set the pace for the investment.
Okay, so not quite there yet in order to make that final investment decision. You mentioned the venture capital money, and it brings up what Occidental has done, which is basically they get other people to fund their direct air carbon capture investments. And I wonder, who might you think about partnering with to do something similar?
Well, I think, as I said, this is a growing space. If you look at the growth in venture funds in climate tech, they've been growing about 5 times faster than the average venture fund growth. And that growth then has really been concentrated in transportation and mobility. There's a big opportunity in the power generation sectors and the industrial sectors for additional investment there. So I think there's opportunities, which is part of what our new low carbon solutions business is going to be focused on, is finding people who are potentially interested in partnering and leveraging the capabilities that ExxonMobil can bring to this space to make the investments and to reduce the amount of carbon in the atmosphere.
Delta, for example, or United has been one of those for Oxy. Have you been able to talk to corporates about this?
So I think that's the piece, that's the market demand piece that I was referring to. So companies that are in sectors that have difficulty decarbonizing are looking for opportunities to offset their carbon emissions, and we think that's an opportunity. So yeah, we'll be looking at that angle as well as the investment angle, bringing that together with our technology and then our projects capabilities, our operating experience in this space, and our facility footprint to see if we can't put those together and have a successful business that grows shareholder value.
Great, but you haven't talked to them yet, just to be totally clear on that?
So we established our low carbon solutions business on March 1st. So that business is now kind of coming up and running, and it's kind of in the early stages of engaging with these different forces that are coming together.
Darren, we really appreciate that and look forward to kind of tracking that progress as well. It is truly an historic shift for Exxon. Thank you.
Okay, guys, how you doing? Probably you okay. I hope so, because it's time to sell short euro. So I'm going to place an order to sell short. The price I'm looking to sell for 120.36.5. Okay, so let's see if you want to get into this trade, you can follow my trade and you can place an order to sell short euro. Okay, position opened, and let's see, let's wait and see how long it will take us to reach necessary profit, and I'll let you know anyway. If you have a strategy, you know what to do. If you don't have a strategy, you can get the strategy on the red line. You can see where you can find the strategy. Otherwise, just follow the trade and make some money, make some profit, learn to trade. I'll speak to you later.
engineers to actually allow to work for a large firm such as Boeing with such technologies that we can see the outcome.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Five minutes away from the opening bell here in New York City, all counting down to Chairman Powell at 12 Eastern. Going into that, futures up a half a point, call it one. Up not even a tenth of 1%, just about in positive territory after a really choppy couple of days in markets worldwide, particularly for big tech. Let's get you some morning calls, a look at some of the analyst recommendations on Wall Street this morning. We begin first up with a call from the team over at Morgan Stanley, raising its GE price target to a street high, $17. The analyst expecting next week's Investor Day to serve as an important catalyst. Your second call from Cowen, downgrading Planet Fitness to market perform with an $85 price target. The analyst expecting soft membership growth to drive negative comps this year. That stock is down a little more than 2%. And your third and final call this morning, it comes from Piper Sandler, upgrading Qualcomm to overweight, a $160 price target. The analyst highlighting the stock's compelling entry point after February's sell-off. That stock is positive by almost 1% to 132.90. That's three of the calls. Coming up, recovery optimism and rising bond yields fueling the rotation out of tech stocks. That conversation still ahead with Chris Harvey of Wells Fargo and Casey Kaminsky of Alpha Simplex. From New York, the opening bell up next this Thursday morning. Good morning. Futures just about negative now. This is Bloomberg.
Catch highlights from the City Lab Global City Summit this weekend on Bloomberg Television. The conversation surrounding cybersecurity, urban planning, and transportation. Plus, special guest, U.S. Department of Transportation Secretary Pete Buttigieg and Vice President of the United States, Kamala Harris.
Cities big and small are the heartbeat of our countries.
The City Lab Global City Summit this weekend on Bloomberg Television and Bloomberg Quick Take. Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
25 seconds away from the opening bell in New York City this morning. Good morning to you all. We're shaping up as follows on the S&P 500, coming in just a little bit, down 3 points and off by almost 1/10%. On a NASDAQ, off by 21 and down a little more than 1/10% there as well. Two questions. Will Chairman Powell lean against the price action in the bond market over the last couple of weeks? And therefore, will Chairman Powell breathe some life back into big tech? Switch up the board into the bond market we go. Yields were lower, then they were higher. Now they're lower again by a basis point to 147 on 10. Some stability going into Chairman Powell's talk a little bit later, 12 Eastern, in around about 2 hours and 30 minutes time. In the FX market, euro weaker, euro dollar 120.34, coming in 1/4%, and crude just keeps on rallying. 62 handle again on WTI. OPEC Plus getting together once again, 62.25 and up by 1.6%. That's the cross-asset story this Thursday with your movers at the market desk. Back with us, I'm pleased to say, Pretty Gupta.
Well, good morning, John. We're starting to see a little bit of a recovery in those big tech heavyweights after the New York FANG index hit correction territory yesterday, all with the exception of Apple. You're seeing the UK Antitrust Authority opening up a probe into Apple's app payment rules, that weighing on the stock a little bit. On the upside, though, oh, and it just turned green, so maybe not so much. On the upside, though, you are seeing Amazon making some strides in their business, opening their first cashierless store outside of the U.S. and negotiating an exclusive streaming right with the NFL. You also have some positivity on the vaccine front. AstraZeneca getting cleared, their vaccine cleared in Germany for the elderly, and CureVac making a deal with Novartis to help manufacture up to 250 million doses. Flip up the boards, and I want to look at those recent outperformers, those big green energy names, all taking a little bit of a pullback today. Plug Power extending their sell-off after it said it would delay some financial reports. Fuel said trading to the downside, in sympathy. You're also seeing some of those commodity-related names, Freeport-McMoRan and Rio Tinto, taking a step back as well, despite those monster rallies that you saw in the past few days. And John, those are your market movers.
Critty, thank you. About 1 minute and 42 seconds into the session, your S&P 500 just about positive, up 1/10%. Energy top of the pile, up by 1%. Information technology has been struggling, down another 0.2%. A huge rotation out of the high-flying tech stocks. The big names that you're all familiar with, the big performers of the last 12 months, really struggling. For the latest, here's Kaylee Lyons. Hey, Kaylee.
Hey, John, a lot of pain has been felt by big tech in the past few weeks. With higher and higher treasury yields, those valuations getting a little bit harder to reckon with. For a long time, the fact that the tech sector was trading at PE multiples last seen in the dot-com era was justified by the fact that we're in a low-yield environment, that you can pay high multiples in the context of ultra-low borrowing costs. But as borrowing costs creep up, that argument gets a bit harder to make. As a result, the NASDAQ 100 down in 9 of the last 13 sessions, even though it is fractionally higher in the first few minutes of trading right now. It's down about 8% from its peak reached last month, nearing correction territory as it hovers just around its lowest levels of the year thus far. And what has been leading the losses within the index are some of the biggest gainers in the prior 11 months. The pandemic winners, the momentum trades that really led this market higher, are suddenly collapsing. Of the 6 best performing stocks in the NASDAQ 100 from March of last year through February of this year, 4 of them are among the biggest losers from February to now. That includes Peloton and Moderna, which are down 31 and 24% respectively over the last month, and Tesla down by 23%. It and some of its mega caps have been the largest drags on the index. Tesla and just 4 other stocks, Apple, Amazon, Microsoft, and Qualcomm, have contributed to 73% of the 719-point loss in the NASDAQ 100 over the month we've just seen. Of course, it isn't just the NASDAQ that these names impact, John. They're heavily weighted within the S&P 500 as well, the tech sector making up 27% of the benchmark. And as a result, as tech has underperformed, we have seen the equal-weighted S&P 500, in which Apple just has the same weighting as a stock like Under Armour, outperform dramatically, up 20% over the last 4 months, whereas the S&P 500 is only up by about 10%. And because of the S&P's new leadership, John, the likes of energy and financials that just can't pull as much weight, there is a question of what is going to be able to drive this market higher, John.
Katie, thank you. We keep coming back to this story. It's an important one, the struggle at the index level. Looking at the index right now, the NASDAQ positive by 0.25% after the biggest two-day sell-off, biggest two-day slide going back 6 months or so. Wedbush's Dan Ives taking advantage of the sell-off in tech and writing the following: it's a golden opportunity to own the secular tech winners at compelling valuations. We believe that there's another 25% upward move in the cards over the coming year. Joining us now to discuss, let's bring in the team, Chris Harvey of Wells Fargo, Katie Kaminsky of Alpha Simplex. Katie, I want to begin with you in this vicious rotation taking place in the equity market. Is it one you want to stick with?
I mean, I think we're really due for this, and we've been seeing that people are really realizing that duration risk is real. Last week, we're wondering if today is going to be the same repeat. We're going to have the Fed come out and be a little bit calm about inflation or how strong this reflation trade is. But last Thursday just made us all realize that this is real. Duration risk has a big impact on individual investors and how they save. And so it's something that we're going to be hearing a lot more about, and thus the rotation may continue.
Yeah, and it bleeds through from the bond market into the equity market by absolutely hammering growth equities. Chris, this has been the story for you coming into the new year. You know, we had a massive rally at the start of the year, and I joked with you, when are you lifting your price target? When are you lifting your price target? And you laughed in my face and said, I'm not. Here's the story. Then the story, Chris, played out. How technically challenged is the headline index on the S&P 500? And this struggle to break 3,900 on the S&P, is it a struggle we have to live with?
It is a struggle we're going to have to live with. This is something that we're going to deal with and talk about for some time, because the S&P 500 is a growth index. And as growth becomes abundant, that premium you pay for growth starts to compress. And as Katie mentioned, there's a duration component to all this. And so you could see the broader market just kind of rotate as financials and your reopening trade continue to really rally, but other parts begin to struggle. So I do think that was one of our mantras coming into the year. It's playing out the way we thought it would. It won't be in a straight line. We'll see days where tech really bounces, but overall, the recovery is coming. Rates, we believe, are going higher. This is not an environment that's really conducive to outperformance for growth and growth stocks.
It's been so difficult, Chris, and largely because of the weighting of growth stocks in a benchmark. Katie was talking about the weighting of big tech on the S&P 500, IT making up about 27%. Just look at the performance of Apple, Amazon, Tesla over the last month alone. We've been down really quite hard. Apple off by 10.5%, Amazon off by 8.6%, Tesla off by 22%. Chris, just a word to you. The research you published this morning, it's a stock picker's paradise. I know you can't do the single names with me live on air. Where'd you find them, Chris?
So one of the things that we did, and John, I think you know this, one thing we've been playing is higher COVID beta, right? Or what people call the reopening trade. And so about a week ago, I think it was a week ago Monday, we upgraded consumer services. And we upgraded consumer services because the sector has lagged by about 15% over the last year. And you have restaurants, you have casinos, you have leisure names. And that's trying to find places where you can still get exposure to the consumer through the reopening trade that will do better as COVID becomes more manageable, but is less picked over and hasn't performed. And the consumer services area that we point people to.
Katie Kaminsky, it's been called a reopening trade. It's been called a reflation trade. What is it to you? And walk me through the characterization, because I do think words matter. When people talk about reflation, is it a reflation trade? Is it just a huge surprise, upside surprise, positive shock from economic growth? What is it? And why does the name we put on it matter?
This is important because we've been watching this trade since last summer. It was sort of this headwind that occurred in what we're kind of thinking of as the great fiscal experiment. And so what we're worrying about is, as we pump more money into the system, where does the system move? And so we saw equities sort of humming along and doing well, but we've started to see massive moves in other asset classes like the dollar and also commodities. And so the reason why the Fed, for example, had to come out and make comments is so many people are watching this reflation in terms of massive resurgence in prices of things that we're going to need down the line for the products that we make in the manufacturing industry and other things that are important to us. So as an example, copper, oil, many of these sort of core core products and commodities have really moved. And so that is sort of a leading indicator, something that's getting us a little concerned about when reflation loses its RE or becomes a potential risk for inflation. This bond move last week was just sort of a wake-up call that, hey, this is something that we really do need to think about.
Copper moving the other way today, down by 1.9%. Crude still positive, Katie, up by 1.7 on Brent, on WTI by 1.5. Chris, I know we're having some problems with your shot, but I understand we still have the audio, so I want to continue the conversation with you, sir. A lot of people will come on shows like this and put the financials and the energy plays into the same bucket as we reopen this economy and drive forward. Do you think that's smart?
A lot of people do it. You are right. We view it slightly differently. We view it on a risk-reward basis. When you look at energy is high risk, high reward. When you look at financials, we think it's a better risk-reward. It's more moderate. You don't need a lot of things to really go right. But with energy, you're still dealing with challenged balance sheet. And so we prefer your banks and financials because they can work as interest rates go higher. It's a great capital give back story. We think the capital market story is also very positive and valuations look attractive. If we're going to have a reinflation, if we're going to have a recovery, obviously energy should participate and is participating, but there's a lot more risk in that story. And we generally look for your best risk rewards, and that's more on your bank and financials than on your energy side, if that makes sense.
10 minutes in, S&P 500 in positive territory, yields coming about a basis point, bit of stability. Katie, I want to give you the final word here, if I may. Core call right now, cross-asset, and you do a great job of looking across the world, looking cross-asset right now. What's the core call for you and the team?
I mean, I think that the biggest call right now is how does the reflation trade change? So, for example, is this going to be a story more about energy versus outperforming some of our precious metals? How are we going to continue to see the bond trend move? And my side, I'm seeing a lot of short signals on bonds. So I'd say watch out. Bonds might be something to worry as opposed to something that's a safe haven going forward.
Katie, great work as always. Katie Kaminsky there. And Chris Harvey, thank you. And sorry, I gave him such a hard time at the start of the year with that price target. Chris, good to see you, mate. Chris Harvey and Katie Kaminsky, thank you. Let's get back to the market desk and get you some movers. Here's Kaylee.
Well, John, a few earnings-related movers to keep an eye on. One of them, Purple Innovation, the mattress company, sinking more than 20% after a double miss. Revenues coming in about 11% below expectations. Earnings per share by about 40%. That stock is down right now about 21% as a result. Also, a disappointing outlook from Vroom, expecting a much wider loss than analysts saw in the first quarter. 68 cents a share, whereas the street was only looking for a 37 cents a share loss. The shares are down 22.5% as a result. Also down, but not quite as sharply as Okta, a tepid outlook, but also an acquisition buying rival ID software maker Auth0 for $6.5 billion in an all-stock deal. Investors don't like it. Those shares down about 6%. Speaking of deals, a few others making news and moving markets this morning. United Natural Foods extending its partnership with Whole Foods until September 2027. Whole Foods right now comprises 17% of the company's sales, so that is good news to investors, bidding the stock up by about 14%. DraftKings is up by about 2% after reaching an agreement to become the exclusive sportsbook for UFC in both the US and Canada. And finally, CureVac inking a pact with Novartis for the company to produce its COVID-19 vaccine candidate. Could boost the supply of the shot by as much as 250 million doses over the course of this year and the next. CureVac is higher by nearly 3% on that news, John.
Kelly, thank you. Coming up, President Biden's stimulus package heading to the Senate with a final vote likely being pushed into the weekend. That conversation up next with Debbie Cunningham of Federated Hermes. From New York City, this is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders.
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
What kind of leader are you?
I'm a leader that works on figuring out destinations that we should aim for and then chooses the direction.
The American Rescue Plan is designed to build on our early progress and finish the job. Whatever our Republican colleagues decide to do, the Senate majority is intent on going forward and helping the American people with bold action quickly.
The Senate entering the final stages of stimulus debate with the chamber eyeing a weekend vote. Bloomberg's Kevin Cirilli joining us down in D.C. for the latest. Morning, Kev.
Good morning, Jonathan. Look, 3 quick points. First and foremost, I'm not sensing that there's going to be any major policy procedural hurdle that would thwart President Biden from signing this sometime, if not over the weekend, then early next week. But again, secondly, I would note here that the debate was set to begin last evening. That was delayed. So that could push this into the weekend. And then finally here, thirdly, tomorrow's Jobs Day, and President Biden is already looking for the next item on his policy agenda. Today at the Oval Office, he's going to be meeting with a bipartisan group of lawmakers on infrastructure. The bottom line, they feel that the stimulus part of their policy agenda is really a done deal, and so they're moving on to infrastructure beginning in earnest today.
Kevin, I just wonder how he works with the governors going forward on a whole range of issues, including infrastructure, and Texas very much in focus right now. You and I talked about the reaction from the administration to Governor Abbott reopening the state. Take a listen to what President Biden had to say.
I think it's a big mistake. Look, I hope everybody's realized by now, these masks make a difference. We are on the cusp of being able to fundamentally change the nature of this disease because of the way in which we're able to get vaccines in people's arms. We've been able to move that all the way up to the end of May to have enough for every American, to get every adult American to get a shot.
So, Kevin, Tom Keene asked the question yesterday, and I think it's an important one. Who's the next Texas? And I just wonder whether the president and this administration can get the governors on the same page about the path forward this year.
He can't. And look, I mean, I would even take it to a Democratic-controlled state in New York when you've got Broadway announcing that starting in April, they're going to be coming back on the Great White Way for limited engagements. I mean, I bring this up not as a laughing matter, but the momentum now is behind reopening, especially when President Biden earlier this week said every adult American in the United States could be vaccinated by the end of May.
And the rate is flying. Kevin, good to see you. 2.0 something million right now, just north of 2 million. That's your daily average over the last 7 days. Absolutely phenomenal. You throw in the $1.9 trillion fiscal stimulus plan, and things get interesting in this market, that's for sure. Debbie Cunningham of Federated Hermes expecting stimulus spending to alleviate pressure on the curve. She writes the following: the fiscal stimulus package will likely be financed in part through additional supply of Treasury bills. This will ease supply strains at the front end of the yield curve. Debbie, I'm pleased to say, joins us now. Debbie, let's start there. I'm not sure how many people are familiar with this outside of fixed income. We've all been seeing yields flying out on the 30-year, 10s on a 7-year, the auction last week. Messy. Walk me through what's been happening with T-bills in the very front of the curve.
Well, certainly T-bills have not benefited from any type of a backup. The curve at this point is maybe 5, 6, 7 basis points steep on any given day, and it is driven by Fed policy. And that Fed policy still has the RRP rate anchored at 0 and IOER at 10 basis points. So you've got really two things that can impact that, and that is a potential change in Fed policy on those two key important rates, or some sort of technical factor, and that would be supply driven. So as additional supply comes into the front end of the market, the bill market in particular, in order to help finance this next stimulus package, hopefully from our standpoint, that means you see the 5, 6, 7 basis point steepness in the yield curve back up to something that's more 10 to 15 basis points in steepness.
Do you think you could kill two birds with one stone, so to speak, and do Operation Twist, Debbie? It's something that's come up a couple of times with Fed speakers over the last couple of weeks. Is that an option or just not the optimal one in your mind?
I think it's very much an option. I mean, the Fed has said they don't need draconian types of measures. They don't need negative rates. They don't need, broadened stimulus packages. But I think making adjustments like an Operation Twist would absolutely be beneficial for some aspects of the longer-term fixed income sector.
Debbie, just going through your core position right now, it's just high quality, front-end commercial paper. Can you walk me through how you're thinking about how you approach this market at the moment?
Certainly. Floaters are out of vogue at this point. They have been a stalwart for liquidity products over, decades. But because of the LIBOR cessation issues at this point and, the SOFR benchmark replacement not necessarily having a credit or a yield curve component to it yet, floaters have been out of favor. And as such, I think a lot of people are focusing on the shorter end of the fixed income, high quality sector to be able to basically keep powder dry so that as supply or technical adjustments come and the money market yield curve steepens out, there is a capability then of taking some of the reinvestments from those short-term fixed income or fixed products out into maybe the 6 to 9 to 12 month sector of the liquidity curve and gaining a little bit more from a spread and a duration standpoint in that move.
Are you expecting a little bit more, incrementally speaking, like last week, for instance, just a little bit more rate volatility, Debbie, as we go through the months ahead, the year ahead, and get the inflation that so many people expect?
Well, it's interesting. Rate volatility can be measured in basis points or it can be measured in percentage terms. And when you have a 2 basis point change in a 25 basis point environment, it's a pretty substantial move. Whereas if you're looking at something that's a 1 or a 2% environment, two basis points means nothing. So I do think in the terms of percentage volatility in the marketplace, we will continue to see some spread developments as well as some supply developments that cause some volatility in that sector.
Appreciate the clinic at the front end, Debbie. Really do. Thanks for joining us. Debbie Cunningham there on the latest in this market. Right now, we turn lower on NASDAQ, off by 0.6%, on the S&P by 0.2%. A little more than 2 hours away from Chairman Powell. With your movers, your sector price action. Here's Kaylee.
Well, John, it's a mixed picture from a sector point of view, but once again, it is energy at the top. The sector up another 0.9% or so, outperforming once again. You also have communication services and consumer staples higher on the day. At the bottom of the barrel, though, information technology down about 0.75%, and materials getting hit hard by the sharp sell-off in industrial metals. And when you look over the last 2 weeks, as we have seen the dramatic sell-off in bond markets and the move higher in treasury yields, it is big tech and bond proxies that have been the biggest losers. Consumer discretionary, which of course is heavily weighted toward Amazon and Tesla, has sunken about 7.5%, information technology by about 5.8%, utilities and consumer staples down about 6 and 3.3% respectively, John.
Kelly, thank you. Coming up, Chairman Powell, just a couple of hours away. The market-moving events you need to be watching. That'll be next in our trading diary. From New York City this morning, good morning. 23 minutes in, we turn just a little bit lower on the S&P, down 0.5% on the NASDAQ. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
We heard from Chairman Powell last week twice, Tuesday, Wednesday. Feels like an absolute lifetime ago. He seemed comfortable with what was happening in the bond market. Called it a statement of confidence. Was he comfortable with Thursday? Was that a statement of confidence? You'll find out in about 2 hours and 5 minutes, I guess, when we hear from him a little bit later. Guy Johnson, Alex Steele will beat the drum into that event a little bit later this afternoon, 12 Eastern. That's when that's taking place. Your market right now, 25 minutes in, we decline on the S&P by a little more than 0.1%, down by 0.17. On the NASDAQ, once again, tech is having a tough time. The NASDAQ off by 0.7%. Here's your trading diary then, what you need to be watching this week. Factory orders at the top of the hour, then it's the big one. Fed Chair Jay Powell speaking at noon Eastern, plus President Biden discussing infrastructure with members of the House, and closing out the week on Friday with the payrolls report coming up tomorrow morning. Your estimate 195, your range anywhere from -35 to positive 500K. Get a dart, throw it on a board. I know a lot more goes into it than that. It's complex, I'm told, but it feels like a guesstimate right now for this economy. Much more still to come from New York City. This was the countdown to the open for our audience worldwide. Continue the conversation on Twitter at Fero TV. This is Bloomberg.
generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport industry buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan, and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water. It's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. He said things of life happens. Yeah, I'm here by myself. So ¿dónde vive acá? En la parte de... This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
Okay guys, where I'm going to put stop on profit for euro. 120.34.5. So if you follow this trade and you need to play stop on profit, otherwise it's not much point to follow my trades if you just want to observe, watch it, just imagine it, how you might make a profit. And this is how day traders work. So based on the profit, not large but small profits, but when you will make many trades a day, you will make quite a good living on it. Okay, so I'm placing a stop on profit for euro to 120.34.5. It gives us £200 in profit. Whatever happened, if price will change and if it will go up, it will be filled at this level. With you, it's all about how much broker pays you per pip. So maybe 20, 30 pounds, 50 pounds, you will get 2 pips profit in this case, and you will get profit 60 pounds or 100 pounds, whatever. Okay, stay safe. I'll speak to you after when this position will be filled. I think it won't be long enough. We will see. Okay, I'll speak to you later, guys.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, I mean, something that I was looking for.
Okay, position is closed, I'll show you where, well, you can see them. Just right here, you're supposed to receive right now from your broker confirmation that you closed your position with profit. In our case, closed here, and it took us how long? 2:30. We entered, and right now 3:15, 45 minutes. We collected profit. Profit, £200. For other people, for maybe our clients who money we trade, they will see when we sold positions, so they will see how much profit we made them. Okay, and I'll show the when it started and when we ended up. That's it. Well done. Good trade. Well done. I'll speak to you again later, and I'll let you know what's happened with next trade, with the trade. Okay? Stay safe.
Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji like you use the most to send to each other?
There's a bear which basically we use for indicating a hug.
Yeah, that's our language basically. Bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue. And it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings there.